So moving on, friends, with the other perquisite element that we have to discuss in this chapter. Now onwards, things are comparatively easy. I'm not saying it is very complicated, very tough and all. Things are comparatively easy only. Okay, so let's understand what exactly is the next perquisite that you should know. That is section 10 subsection 5, that is exemption in respect of leave travel concession. First of all, friends, listen. Say I am your employer and I am sponsoring your travel. Okay, I have sponsored a travel, a tour. You are planning for a tour with your family and I have sponsored that respective tour. Are you all listening? Yes. When I am sponsoring your tour, are you getting any benefit? Are you getting any benefit? Of course, yes. What is the benefit? You don't have to spend any penny for your personal tour. Your employer is sponsoring that entire tour. Yes or no? Yes, so you're getting a benefit due to that employer-employee relationship. And hence, it should be taxable under perquisites. Yes or no? Yes, the entire traveling cost, lodging, accommodation, other expenses, etc. sponsored by the employer for the benefit of employee normally have to be assessed as a taxable perquisite in the hands of employee. But income tax department say, don't worry, the employee can claim a small exemption according to the condition notified under section 10 subsection 5. It is not fully exempted. It is exempted subject to certain conditions and other things. Are you with me? Let's understand how much is the exemption. What are the other conditions? So it is called as what? Exemption in respect of leave travel concession. So let's understand what exactly is this exemption. Can you read the first blue table? What is that? This exemption is available to an individual in respect of travel concession or assistance for himself or for herself and for his or her family. That simply means when you are on a tour, what all are the related expenses that you have to incur for a tour? Number one, the traveling, the ticket cost, whatever it is. Are you with me? Plus food, plus your body, staying in a particular hotel. Then maybe the miscellaneous expenses like shopping and other things. Are you all with me? If the employer is sponsoring entire tour, only the traveling cost alone can be claimed as an exemption. The rest of the cost, some sponsored by the employer, shall be fully taxable in the hands of employee. So exemption under 10 subsection 5 is limited to only for what? Traveling expenses. You can claim an exemption. That means if you are an employee and you can claim an exemption only for the traveling cost component incurred by the employer, not for the rest of the items. Are you with me? Are you with me? Only for the traveling cost you can claim an exemption, not for the rest of items. So that is what the department say. So this exemption is available to an individual in respect of travel concession or assistance for himself or herself or for his or her family. Now, what is the next box? Can you read the next box? The exemption in all cases will be subjected to amount actually spent and limited to 2 journeys performed in a block of 4 calendar years from commencing from the calendar year 1986. This is actually very interesting thing. Can you perform n number of journeys and can you take exemption for the entire traveling cost that you are incurring? Can you perform n number of journeys and can you take exemption for the entire traveling cost sponsored by your employer? The answer is no, not possible. Is there any limit for the number of journeys that you can perform? Yes. How many journeys? 2 journeys. That too in a block of 4 calendar years starting from 1986. What is that starting from 1986? Listen, there is an interesting thing. So the first block for every person will be 1986, 87, 88, 89. It is like that. So I'll display a set of chart for a better understanding. Listen, they are saying starting from 1986. So 1986, 87, 88, 89, 90. 86, 87, 88, 89. So 86 to 89 is the first block. Then 90, 91, 92, 93. 90 to 93 is the second block. Then you tell me the third block. 94 to 97. Yes or no? 94, 95, 96, 97. Then 98 to 2001. Yes or no? Then 2002 to 2000. Array, count and tell me. 2002 to 2000. Then 2006 to. Then 10 to. Then 14 to. Then 18 to 21. Then 22 to 25. So listen, I am a person who joined on a respective company or joined in a company today. Are you with me? Imagine today's date as say 19th October 2024. So I joined in a company today. And you tell me which is my relevant block. It is not from the date of joining up to 4 years. It is not like that. I am entering into a respective block. You tell me 2024 comes in which block? In between which block? 22, 25. So automatically I am entering into 22, 25 block. In that respective block, I can perform a journey up to 2. That's it. Not 4, 2. In a block of 4 calendar years, I can perform a journey up to 2 and claim exemption for the traveling cost which is reimbursed by my employer. That's it. This is what 10 subsection 5 is all about. Are you with me? Are you with me? So these blocks are fixed. It is not in respect of your date of joining up to 4. It is not like that. These blocks are fixed. Whenever you are joining a company, you are entering into a respective block. Are you with me? Yes. So the relevant block for you for your May 2025 examination or September 25 examination or January 26 examination will be 22, 25 block. Are you with me? Yes, because your relevant previous year starts from 1st April 2024 ends with 31st March 2025. This is between this block. And hence we can say your relevant block for the upcoming examination will be 22, 25. Have you understood the concept? Have you understood the concept? So blocks are actually fixed. Whenever you are joining a company, you have to check into which block you are entering into. In that block, maximum 2 journeys. That too only for the traveling cost. You can claim an exemption if it is reimbursed by your employer. Are you all with me? Now, let's read that particular box again, friends. Can you read that box again? The exemption in all cases will be subjected to the amount actually spent and limited to 2 journeys performed in a block of 4 calendar years commencing from the calendar year 1986. This is what the department says. Are you all with me? Yes. Have you understood the concept? Now, moving on to the next one. What is the third box? Where such travel concession or assistance is not availed by individual during any block of 4 calendar years. One such unavailed leave travel concession, LTC means what? Leave travel concession will be carried forward to immediately succeeding block of 4 calendar years and will be eligible for exemption. What do you mean by that? Can you read that green box again? So let's see what exactly is that. Listen, say your first block is 2022-25. Your first block is you joined a company and your first relevant block is 2022-25. But you haven't performed any journey. You haven't performed any journey. Or rather we can say you haven't taken any exemption in that relevant block. Then you can claim an exemption up to 2 journeys performed. Yes or no? Yes or no? But you haven't taken any exemption at all. So what you can do is, you could have performed 2. Out of 2, you can pick 1 and you can carry forward it to the next block. Which is the next block? 26, 29. If there is no journeys performed in a respective block, you can pick one and you can carry forward into the next block. Are you with me? Are you with me? Imagine, friends, what if I have performed one journey in 22-25 and I have one remaining? Can I carry forward into the next year? No, not possible. If there is no journeys performed out of two, one I can pick and carry forward to the next block. It is like that. If I perform one, then also I cannot carry forward the remaining one. Are you with me? Yes. So the wordings of the income tax department is very clear. If there are no journeys performed in a block, I can pick one and carry forward to the next year. That's it. So in the next block, not next year, next block. Okay. So in the next block, how many journeys I can perform effectively and claim exemption? 3. Because for the next block, I have already 2 plus 1 carry forward. Are you with me? What if I haven't performed any journeys in the next block also? There are 3 journeys I could have performed. I haven't performed any. Then only 1 among 3 I can pick up and carry forward to the next block. So carry forward is only 1 always. That too, if you haven't taken the exemption under 10 subsection 5 in a respective calendar year block. Are you with me? If you have performed any also, you cannot carry forward that respective remaining one to the next block. If there is no journeys performed only, you can pick one and carry forward into the next block. Are you with me? Yes, sir. Are you with me? Yes. Perfect. So moving on to the next item. So what was the next item? Let's read that particular green box again. So I want all of you to read that green box along with me. Where such travel concession or assistance is not availed by individual during any block of 4 calendar years, one such unavailed leave travel concession will be carried forward to the immediately succeeding block of 4 calendar years and will be eligible for exemption. So out of 2, pick one, carry forward into the next calendar year block. That's what the department says. Are you all with me? Yes. Perfect. So 3 things we have learned. Number 1, for the traveling cost you can claim exemption. That too only up to 2 journeys which is performed in a block of 4 calendar years starting from 1986 onwards. Number 3, if you haven't performed any journey in a block, you can pick one and carry forward into the next block and claim exemption for 3 journeys. Are you with me? Are you with me? Perfect. Now there are certain notes that you should understand. What is note number 1? Can you read note number 1? Spouse or children of the individuals and parents, brothers and sisters of the individual or any of them wholly or mainly depend upon the individual. The family means what? Family simply means your spouse or children always. Spouse or children, whether they are dependent or independent, they are always your family. But in the case of parents, brothers and sisters shall be called as family only if they are dependent on you. Are you with me? That means in your home, your brothers, sisters and parents, you are living in a respective home where you are the earning member and your parents, brothers, sisters, your wife and your children, everybody is staying together. Then you can take everyone and perform the journey. And if your employer reimburse the entire traveling cost, you can claim an exemption for the entire traveling cost under section 10 subsection 5. Are you with me? Are you with me? Understand and learn the concept from here itself. Okay, understand and learn the concept from here itself. Moving on. Now, this is another interesting thing. What is the next note? Can you read the next note? The exemption referred to shall not be available to more than 2 surviving children of an individual after 1st September 1998. To be very clear, after 1st October 1998. We can write born after. Okay, there is something missing. Born after 1st October 1998. What do you mean by that? Can you read that note again? The exemption refer shall not be available to more than 2 surviving children of an individual born after 1st October 1998. What does that mean? Listen. Say for example, there is a person called Mr. A. Mr. A. Are you all listening? Are you all listening? This Mr. A have 8 children. Okay, he have how many children? 8 children. We can divide his children into 2. The first set of children born before 1st October 1998. The first set of children born before 1st October 1998. Say there are 5 children. 5 children are there and they born before 1st October 1998. Now, 3 children is on or after 1st October 1998. So 3 children on or after 1st October 1998. So how many children you have? 8. Are you with me? 8 children and 1 wife. So he took everyone for a trip. On a Delhi trip. They came back also. Entire traveling cost is reimbursed by the employer. How can he claim the exemption? He can claim exemption for his traveling cost, his wife's traveling cost, absolutely no problem. When it comes to the children, he can claim the traveling cost of this 5 children, no problem. Plus any 2 out of this 3. Why any 2 out of this 3? Because there is a restriction for the exemption that you can claim if the children are born on or after 1st October 1998. If you have children which is born on or after 1st October 1998, you can claim the exemption for the traveling cost of them only up to 2 children. That means if you have 3 and you have taken all the 3 for the travel, then for only 2 children's traveling cost, you can claim exemption, not more than that. But if the children are born before 1st October 1998, there is no such restriction exists because this restriction came on with effect from 1st October 1998. Are you with me? Are you with me? So if you have more number of children before that, absolutely no problem. You take everyone. You take everyone and claim exemption for your traveling cost. What if you have children born or after 1st October 1998? Out of 3-4 children, take only 2. If you are taking everyone, you will not get exemption for the all. You will only get exemption for 2 out of how many numbers you have. Here in this example, it is 3. So indirectly, government is saying 2 children. Okay, wow. So rather they say we will give exemption only for 2 children if they are born or after 1st October 1998. Are you with me? Are you with me? Perfect. Now there is another relaxation for this. Okay, let's understand what is the relaxation. Imagine a situation where these 3 children, the first one is actually say a boy. First you have a boy. Thereafter you have 2 twin girls. Are you with me? Are you with me? The first born was a boy or vice versa, no problem. First born was a girl and you have a 2 twin boys after that. So the point is after first birth you have twins or triplets. What is triplets? 3 children in a go. These are like very rare but still 2 or 3 or 4 or 5 or 6 or 7 or 8. 8 and all I have never heard. Up to 4 I have heard. Okay, up to 4 I have read in newspaper. I don't know whether it is where it is. I think in Maharashtra somewhere. 4 I have heard. I don't know whether it is true or not. Heard somewhere. So listen, it's a rare case. So after the first born, there are twins or triplets. Then what will happen? Actually, there are 3 in that case. 1 boy and 2 girls. Are you with me? Are you with me? But income tax department is so generous. What they are saying is this: the restrictive sub rule shall not apply in respect of children born before 1st October 1998 and also in case of multiple birth after 1 child. That means if you have children which is born on or after 1st October 1998. Are you with me? Not before, you don't have. And also in respect of multiple births after one child. This is basically after 1st October 1998. Before, there is no restriction at all. Before 1998, they shouldn't say this because there is no restriction at all. If it is after 1st October 1998, after firstborn, there are multiples. No problem. That also will be counted as one only. You can consider, you can take everyone and you can claim exemption for everybody's traveling cost. Are you with me? Are you with me? So that point is very simple. If children born after, in the case of children born after 1st October 1998, what they are saying is, after firstborn, there are twins or multiples, no restriction for number of children. You can take that entire set of children and you can go for a tour and claim their traveling cost as what? As what? As an exemption under section 10 subsection 5. Are you with me? What if the firstborn itself was twins? Then this relaxation is not applicable. After firstborn, if it is a twins, then no problem. The firstborn itself is twins, then it will be counted as 2 only. Are you with me? Are you with me? You were planning for 2 children. After first children, it was twins. Not your problem. Are you with me? The firstborn itself is twins. Adoda nirthakinga. Are you all here? Are you all here? The intent. So very simple point. 1st October 1998 onwards, there is a restriction. And how much is the restriction? Up to 2 children's traveling cost, you can claim the exemption. For that, they are saying yes, children which are born after 1st October 1998, after the firstborn, if there are multiples like triplets or twins, whatever it is, then you can count everyone. You can take everyone and go for the tour and claim that all of their traveling cost as what? Exemption. Are you all with me? Are you all with me? So after firstborn, there are multiples, no restriction for the number of children. That's what the department says. I hope that point is clear for you. Is that clear? Is that clear? Perfect. Moving on, friends, let's understand what is the next one. What is the next note? Can you read the next note? Value of leave travel concession provided to High Court judge or Supreme Court judge and members of his family are completely exempt without any conditions. If you are a Supreme Court judge or a High Court judge, for you, you are getting a what? A leave travel concession, then that entire leave travel concession shall be fully exempted without any conditions. High Court judges and Supreme Court judges have this privilege. Are you with me? Are you with me? Perfect. And what is note number 5? The exemption is available only if journey is performed in India. You are going for a foreign travel. Will you get exemption? No. You want to claim exemption? You roam around India. That's it. Planning to go abroad? Why should we give you exemption? No exemption at all. You visit only India. India is a beautiful place to visit. You roam around India. You go out, no exemption. Are you with me? Are you with me? And it applies to the traveling cost only. That means the ticket cost only incurred for not for the other expenses. That means food, accommodation, shopping, etc. incurred during travel. If your food, accommodation, etc. is reimbursed by your generous employer, can you claim exemption for the other costs reimbursed? Not possible. The exemption is limited only for what? Traveling cost, not for the other cost. Are you with me? Are you with me? That was note number 5. So let's summarize the things. It's not yet over, but still let's have a summary. So tell me, friends, what does 10 subsection 5 is all about? You are an employee. You are performing a journey within India. Okay. What department say if that journey is sponsored by your employer, then the cost incurred by the employer for your tour is actually a benefit given to the employee, but nothing shall be taxable. You can claim an exemption under 10 subsection 5, but only for the traveling cost alone. All the other related costs shall be fully taxable. And maximum exemption shall be for up to 2 journeys that you have performed in a block of 4 calendar years. You, your wife, your children, your parents, brothers and sisters, if they are dependent on you, also can perform the journey. And if their cost is also reimbursed by the employer, you can claim exemption as well. Are you with me? If there are no journeys performed in a block of 4 calendar years, then you can take what? 1 and carry forward to the next year and perform up to 3 and claim exemption. Absolutely no problem. But there are certain limits for the number of the children that you can take. If the children are born on or after 1st October 1998, how many is the restriction? 2. That too there is a relaxation. If the children they are born after 1st October 1998, after the first born, if there are twins, you can take everyone, perform the journey, take the reimbursement and claim exemption for all the traveling costs. Are you with me? Are you with me? High Court judges, Supreme Court judges, fully exempted. There is no condition and nothing else. Are you with me? Yes. Now one more restriction is there under this, that they are saying that you cannot simply take your entire traveling cost. There are certain restrictions for the traveling cost as well. Are you with me? Right now I told you that you will get exemption for the traveling cost, but not in full. There are conditions for the traveling cost as well. Let's understand what exactly are the conditions for the traveling cost as well. Are you all listening? Yes. Are you all listening? Yes. Perfect. So, can you read the heading? Monetary limits of exemption shall be based on mode of journey performed and are as follows. Your exemption depends on the mode of journey that you perform. What do you mean by mode of journey? Whether you are traveling in flight, train, car, bullet, lorry, then bus, then whatever it is. Are you with me? So depends upon that. The exemption also varies. So let's understand. What is the first one? Journey performed by air. That means flight. Okay. That means what? Flight. How much is the maximum exemption? Can you read the box? Amount not exceeding the air economy fare of the national carrier by the shortest route to the place of destination. What do you mean by this shortest route? First of all, say from Chennai, are you all listening? From Chennai, you are going to Delhi and you came back. So your trip is Chennai, Delhi and back. Are you with me? You performed that journey through air. You took a air ticket. You booked the air ticket. Say Indigo Airlines. You booked the tickets of Indigo Airlines. Perform the journey as well. Are you with me? Yes. How much is the maximum exemption? What exactly is the economy ticket fare of Chennai, Delhi flight? That entire cost you can claim exemption. That means if you are traveling in any other category like business class or something, you will not get exemption for that. Maximum exemption only for the economy class. Even if you perform the journey in business class, you can claim an exemption only up to economy class ticket fare. Are you with me? Yes, are you with me? Yes. But there is another thing. Say your travel is from, say, Chennai, Hyderabad, Delhi, Chennai. This was your journey. You first went to Hyderabad. You visited Charminar and the other places in Hyderabad. Then you went to Delhi. Are you with me? Then you came back. This is your journey. Then, as you can see, you started from Chennai, went to Hyderabad, then you went to Delhi, then you came back. If your journey is like this, then what will happen? How much is the maximum exemption? You go and check what is the air ticket cost of Chennai, Delhi and coming back. Are you with me? That means from the place of destination to the farthest point, that too in the shortest route. Which is your place of destination? Chennai. Which is the farthest point? Delhi. So straight away if you can go to Delhi and coming back, what will be the economy class ticket fare? Only that much you can claim as an exemption. You have performed the journey to Hyderabad. Then from Hyderabad to Delhi and you came back. So destination is Chennai and the farthest point is, your starting destination is Chennai and the farthest point is Delhi. So Chennai, Delhi flight ticket and coming back. Delhi, Chennai leg also you can claim an exemption, that only for economy class fare. Are you with me? Are you with me? So read that first box again. Amount not exceeding the air economy fare of the national carrier by the shortest route to the place of destination. Are you with me? Are you with me? If there are multiple journey points, then from the place of origin till the place of farthest point and coming back, what is the shortest route? Shortest route means you take your entire journey, you check the shortest route for that entire journey. That will be your maximum exemption. Are you with me? Are you with me? Now, this exemption is if you are performing your journey by flight. What if it is any other mode? Let's see, you are performing your journey in any other mode. Then let's understand how to claim the exemption. Are you all listening? So, the first thing that you have to check is whether rail service is available. What do you mean by where rail service is available? Irrespective of your mode of journey, your place was covered by Indian Railway. Say for example, you went on a car from Chennai to Delhi and you came back. There is rail service from Chennai to Delhi. Whether there is direct train or not is not a factor. You can go by rail to Delhi. Are you with me? From Chennai. Are you all here? If there are rail service, then how much is the maximum exemption? Amount not exceeding air conditioned first class rail fare by the shortest route to the place of destination. What does that mean? You performed your journey by a car from Chennai to Delhi. Your traveling cost will be the fuel cost. Are you with me? Entire fuel cost is reimbursed by your employer. Can you claim exemption for the entire fuel cost? No. What you have to check is, you have performed the journey other than flight. Then you have to check, the first thing is what? Whether your destination and origin covered by railway. If yes, what is the maximum exemption? First class AC fare ticket of that train from Chennai to Delhi and coming back. That is the maximum exemption. You cannot claim that entire fuel cost reimbursed by your employer. Not possible. Are you with me? Are you with me? So what is that like? You have performed the journey in any other mode, plus your origin and destination is covered by rail. Then how much is the maximum exemption? It is air conditioned first class rail fare by the shortest route to the place of destination. That is your maximum exemption, not more than that. Are you all listening? Are you all listening? Perfect. Moving on to the next one. What if there is no rail service? What if there is no rail service with your origin and destination? Let's see. So, listen. Say I am visiting a place. Listen. I am visiting a place where there is no railway station or rail service. So, I'll call it as XYZ. Okay, that is a place name. There is a place called XYZ. And I am starting my journey from Chennai to XYZ. And I came back by road. Okay, so I took road. You tell me there is no railway connection. There is no railway connection between C and Chennai and XYZ place. Are you with me? Are you with me? Then you tell me, how do you find out the exemption? Very simple. Where rail service is not available, what is the first thing that you have to check? Whether a recognized public transport system exists. What is that? BES. An approved BES service is available from Chennai to XYZ place. Are you with me? Tamil Nadu State Road Transport System, TNSRTC, whether it is available or not. You can check. TNSTC, whatever it is. TNSTC. Yeah. You have to check whether there is TNSTC service available from Chennai to XYZ place. Are you with me? Say the answer is yes, then amount not exceeding first class or deluxe class fare on such transport system by the shortest route to the place of destination. That simply means if there is any recognized public transport system available from your Chennai to XYZ place, then what you should take? Maximum exemption shall be the ticket cost of that particular bus from Chennai to XYZ. Are you with me? Are you all listening? How much is the maximum exemption? The ticket cost from Chennai to that place, XYZ, whatever that place is all about. Are you all with me? Now, what if it is comedy, okay? What if there is no public transport system exists? Listen, see, the first thing that you have to check is whether you have performed your journey in flight. Yes or no? If you are not performing your journey through flight, that means any other mode of system, you have to check whether there is railway connection or not. If there is no railway connection, then you have to check whether there is public transport system or not. If the public transport system is also not available, then how do you claim exemption? Can you read the box? There are certain uncertainty in this box. Can you read the box? Amount equivalent to air conditioned first class rail fare for the distance of journey by the shortest route as if the journey had been performed by the rail. What does that mean? Can you read that box and tell me what exactly that means? Then amount equivalent to air conditioned first class rail fare for the distance of journey by the shortest route as if the journey had been performed by rail. What is that? If there could have been a rail service to XYZ place, what could have been the ticket cost? How do you find out that? Based on kilometer? Not possible, because train costs are not based on exact kilometers, based on the facility. Different train timings, etc. The charge also differs. Are you with me? So in such scenario, practically what you can do is, in examination they will give her that figure. Practically what you do is, you find the nearest railway station. You find the nearest railway station wherever it is available. Then you take that ticket cost. You perform a journey in a respective time. You check the nearby timing, train time, and the train ticket cost to that respective station, and you take it as an exemption. That is the only way you can find out that exemption. But in exam, they will give that figure in your exams. Are you with me? Practically, nobody is going to give that figures. We ourselves have to find out everything. So practically what we do is we find out the nearest railway station and we take the ticket cost as an exemption, or approximate figure we can take. Are you all with me? So let's summarize. Very simple. The first thing to check in your journey is the mode of journey performed. If it is through air, economy, air ticket cost. From place of origin to the farthest point and coming back. That too, economy, ticket cost. Are you with me? What if the journey is performed in any other mode? Check whether there is train connection between the origin and destination. If yes, then first class AC fare for the shortest route. If there is no rail connection, check whether there is any public transport system exists. If yes, that ticket cost. If no, then you take the train ticket cost as if you have performed that journey through train. That means you go find out the nearest railway station and find out the ticket cost, and you can claim that amount as an exemption. Are you with me? Are you with me? So the exemption that we were discussing all about is which section? 10 subsection 5. That is exemption in respect of leave travel concession. You are performing a journey, your employer is reimbursing that entire traveling cost, then the traveling cost reimbursed by the employer shall be an exemption subjected to section 10 subsection 5. The rest of the amount reimbursed by the employer shall become your taxable value of perquisites. Are you with me? Okay, friends, so moving on to the next component. Keep quiet and listen. Next one is valuation of medical facilities. We are about to discuss perquisites which are connected with medical facilities provided by the employer to the employee. Are you all listening? Read the heading: medical facilities. Proviso to section 17 subsection 2. Let's understand. So friends, listen. the following medical facilities provided by the employer to the employee shall be fully exempted. Are you with me? The following medical facilities provided to employee by the employer to the employee shall be fully exempted. Imagine a situation where, say, I am your employer and I am reimbursing all your medical expenses. I am an employer and I am reimbursing your all medical expenses. You tell me, are you getting a benefit? Are you getting a benefit? Yes, you don't have to spend any penny for your own medical expenses. I am sponsoring it. Yes or no? So it should be an element taxable under the head salary. But department said, don't worry, you can claim the exemption for the following. The rest of the medical expenses are fully taxable. For the following, you can claim an exemption. The rest shall be fully taxable. Are you all listening? Are you all listening? What is item number 1 under exemption? Can you read item number 1? Value of medical treatment in any hospital maintained by the employer. What does that mean? Say, I am your employer. I myself is the owner of a hospital. For all my employees, treatment is free. Are you with me? I own the hospital and I'm providing free treatment for all my employees. You are getting a benefit because you don't have to spend anything for your treatment. But department say nothing shall be taxable. So the value of any medical treatment provided to the employee or any member of his family in a hospital maintained by employer shall not be considered as a taxable perquisite. These are not what? Taxable perquisite. Are you with me? Are you with me? So what is the first point? Repeat along with me. That is the value of medical treatment provided to the employee or any member of his family. What do you mean by member of his family? Your spouse, children, parents, brothers, sisters, etc., etc. Are you with me? Are you with me? For there is a definition. For this purpose, family means spouse, children of the individual. Children may be dependent or independent, married or unmarried. It also includes parents, brothers, sisters, if they are wholly and mainly dependent upon the individual. Are you with me? Moving on. So the first one, in an owned hospital, whatever medical facilities provided by the employer to the employee shall be fully exempted. Even though you are getting a benefit, nothing shall be taxable because it is under the exemption category. Are you with me? Second item. Can you read the second item? Reimbursement of expenditure actually incurred on medical treatment. That means you have incurred some medical expenditure and I am reimbursing it. Who am I? Who am I? Employer. Who are you? Employees. Are you with me? I am reimbursing your medical expenditure. But for that, if the medical expenses are incurred by the employee for his treatment or treatment of member of his family in any hospital maintained by government or local authority or other hospital approved by the government. Listen, you are undergoing a treatment in a government hospital or a hospital owned by government or a local authority or a hospital approved by the government like ESIC hospital and all. You're going and undergoing a treatment over there. I am reimbursing the cost. First of all, the cost will be very less. In government hospital, it is almost free. But not everything is free. There are some minimal charges that I am reimbursing. Don't worry, nothing shall be taxable. But the treatment, you have to undergo the treatment in which hospital? Either government hospital or a hospital owned by the municipality, panchayat, etc., local body, the local authority, or government approved hospital. You're going a treatment in a private hospital. Will you get the benefit of exemption? Normally, no. Are you with me? Are you with me? So coming back to the point. So the first point was the employee is undergoing a treatment in a hospital owned by the government or local authority or any approved government hospital. Nothing shall be taxable. Are you with me? What is the next one under that? In respect of prescribed diseases, including illness relating to COVID-19 or ailments in a hospital approved by the Principal Chief Commissioner or Chief Commissioner of Income Tax. So you are undergoing a treatment for, say, cancer, tumor, etc. These are called as prescribed diseases. There are a list of prescribed diseases. that you don't have to study. Are you with me?
Yes, sir.
Are you with me? So in the income tax schedule, there are a list of prescribed diseases. If you are undergoing a treatment in a commissioner approved hospital for your prescribed diseases, again nothing shall be taxable. And the prescribed illness includes COVID-19. Are you with me? Are you with me? Because COVID-19 was considered as a prescribed illness earlier. Right now it is just like a cold. COVID na, okay. 2 days le poyidu. Earlier it was COVID na, appa sette. Right now it's altogether different. So everybody used to COVID. COVID, inga va, inga dillu. Paprida. So moving on to the point. So 2 things have been fully exempted. Which are the 2 things? Number 1, treatment in a hospital, authority by the government, local authority, or government approved. Number 2, treatment in a commissioner approved hospital, that too for prescribed diseases or ailments, including COVID-19. Perfect. So what is the next one? Can you read the next one? Premium paid on, effect and insurance on the health of employee. Imagine, I'm your employer and I have taken a health insurance for your benefit. I've taken what? A health insurance for your benefit. I'm paying the premium. Are you getting any benefit? Are you getting any benefit? Yes. If you take the health insurance by yourself, you yourself have to pay the premium. Now I'm paying premium for you and you are getting a benefit. That benefit shall not be taxable. Not taxable. Why? Because it is exempted. That's what we are about to discuss. Any premium paid or reimbursed by employer in relation to an employee to effect an insurance on the health of such employee. Are you with me? For the benefit of health, if you are paying any premium, that premium, even though you are getting a benefit, nothing shall be taxable because it is fully exempted. But the insurance scheme should be approved by the central government or IRDA. Central government, you know. What is IRDA? Insurance Regulatory Development Authority. First of all the insurances have to be approved by IRDA. You cannot run an insurance business without the approval of IRDA. So in exams, whether they are saying approved by IRDA or not, you can claim the exemption. But in question, if they are saying it is not approved by IRDA, then don't claim exemption. Are you with me? Yes, normally it is an impossible thing, it's illegal to do. Okay, you have to get an approval from IRDA basically. But in the question, the examiner is saying you are running an insurance which is not approved by IRDA, then it is like that only. You cannot claim any exemption. Are you with me? In examination, all the hypothetical situations may come in. You have to write accordingly. Are you with me? Perfect. Moving on to the last item under this table. Can you read the last item? Amount paid towards expenditure incurred outside India on medical treatment. Okay, listen. Say you have a medical problem and I am sponsoring your treatment, but you are undergoing treatment abroad. You're going to US for your treatment. I'm sponsoring everything. Are you with me?
Yes, sir.
Are you with me? And you took one attendant as well. What is one attendant? One more person for a company, because traveling alone to US will not be that good. At least you should take one attendant as well. Are you with me? So you and your family or your caretaker or your friend, whoever it is traveling abroad, US for your medical treatment. Are you with me?
Yes, sir.
Now imagine, what all are the associated costs that may incur? What all are the associated costs that may incur? Traveling cost. First you have to travel to US. Then food and accommodation. Then medical expenditure. That is why you are traveling over there. Yes or no? So obviously there will be medical expenditure, traveling costs and other accommodation expenses. Everything is reimbursed by the employer. So generous person. Everything is reimbursed by the employer. Now the question is, can you get an exemption? Yes, subject to certain conditions and regulations. Are you with me?
Yes,
Let's understand what is item number 1. Can you read item number 1? Medical expenditure abroad incurred for employee or any member of family paid or reimbursed by the employer is exempted to the extent permitted to RBI. First of all, RBI have to fix the limit. It is called as fixing the limit by Reserve Bank of India. Normally it is under LRS, liberalized remittance scheme, but you wouldn't have to study all those things. So only for the time being, understand it as a ceiling limit prescribed by Reserve Bank of India, because you are transferring fund abroad. RBI always fixes certain limits for that. Are you with me? And the limit RBI normally fixes is for the everything, for your travel, then accommodation, for your medical expenditure, everything together, they normally fix the limits. Are you with me? Now, what is point number 2? The cost of stay abroad, that is patient plus one attendant or caretaker, exempted to the extent permitted by RBI. So the medical expenditure cost plus what? Cost of stay abroad. You can claim the exemption. How about traveling cost? Can you claim? Yes. The traveling cost of patient and one attendant or caretaker exempted, but only when the gross total income of the employee, excluding this perquisite, does not exceed 2 lakhs per annum. So listen, whenever you are undergoing a treatment abroad, we can divide or split that expenditures into 3. Number 1, medical expenditure, fully exempted. Number 2, staying abroad, fully exempted. But number 3, for traveling cost, you will get an exemption only if your gross total income is less than or equal to 2 lakh. What is gross total income? What do you mean by gross total income? Income from the head salary, house property, PGBP, capital gain, IFOS, everything put together, you will get a figure. That figure is said to be what? Gross total income. If that income is less than 2 lakh only, you will get the exemption. And first of all, practically, if you are a person, you are an employee and your GTI is less than 2 lakh, that means you are not an important employee in the company. For you, no employer is going to sponsor an overseas medical trip. He may, if he is that generous, rarest of the rare case. But for examination, that is not applicable for you, whether it is rare or whether it happens, because the employer is so generous. Even my peon or even my person who I know in my company, whatever the level is, he should go to US for his treatment. If the employer is in that sense, then we cannot say anything. It is according to his wish. But practically, the chances are very less. Are you with me? Are you with me? It is possible. I'm not saying that it is not possible, but again, the chances are very less. So 3 things. We can divide the 3 things again. We can discuss the 3 things again. Number 1, medical expenditure, fully exempted. Number 2, cost of stay abroad of the patient as well as attendant, fully exempted. Third one, traveling cost of the patient and attendant is exempted only on a condition that the assessee's gross total income should be less than or equal to 2 lakhs. If it is yes, then you can claim exemption. Otherwise, you have to add that amount to the GTI. Are you with me? Are you with me? So the last one was what? Medical expenditure incurred abroad. And that note we have already discussed whose family, spouse, children, parents, brothers and sisters, if they are wholly or partially or wholly or completely depend upon the individual. Wholly and mainly. Okay. Now, listen. Let's summarize this medical facilities one by one. So you tell me, what was the first one? Medical expenditure incurred in a hospital owned by the employer. Irrespective of the type of treatment, it is fully exempted. Number 2, medical treatment undergone in a government hospital or a government approved hospital, fully exempted irrespective of the illness or the type of treatment you are undergoing. Number 3, medical expenditure for prescribed diseases including COVID-19 in a hospital approved by the Income Tax Commissioner. Again, you can claim what? Exemption. Are you with me? Then, next one, premium paid in respect to health insurance. You can claim exemption. Are you with me? Health insurance of employee, provided that insurance company should have an approval from IRDA or CG, central government. Then, normally it is IRDA only, but if it is a special case approved by central government also, you can claim the exemption. And what is the last one? Any expenditure for a foreign medical treatment divided into 3 First of all, medical expenditure exempted. Second one, cost of stay abroad for the patient as well as one attendant exempted. Cost of travel for the patient and one attendant is exempted only subjected to one condition, that the assessees GTI should be less than or equal to 2 lakh. What is GTI? Gross total income. Is that clear? Is that clear? And for the travel and the cost of stay abroad as well as the medical expenditure in relation to the foreign medical treatment, always check the RBI ceiling also. The exemption is always subjected to the amount fixed by RBI, not more than that. Are you with me? And the RBI fixes a ceiling limit for that entire event, not for traveling alone, not for medical treatment alone, for the entire event. So moving on with the next one. Now we will discuss each and every perquisites in different permutations and combinations. Are you with me? So the next perquisite that we have to discuss is valuation of residential accommodation. What is that? Valuation of residential accommodation. What do you mean by residential accommodation or valuation of residential accommodation? So listen. Yes, friends. So let's move on and discuss what exactly is this valuation of residential house. Are you all listening? Are you all listening? So imagine a case where, say, my employer, say I'm your employer and you are my employee. I'm giving you a house. I'm giving you what? A house. You are living in that particular house for free. Are you with me? Are you with me? Are you getting a benefit? Yes. What is your benefit? You don't have to pay rent. Since you are my employees, I'm not charging any rent from you. I'm allowing you to stay in my house without paying any rent. You are getting a benefit, yes or no? You have to show the value of the benefit as a taxable perquisite. It is fully taxable. You have to show the value of benefit that you got as a taxable perquisite and pay the taxes. How do we value that? That's what we are about to discuss right now. Are you with me? So you are staying in a house owned by the employer, or the employer provides a house which is taken on lease to the employee, etc. How do we value the taxable component of perquisite? That's what we are about to discuss. So let's start our discussion. And here there is an amendment. It is an amended area. We can see a lot of amendments over here. So listen, how do we value the perquisite? So it is called as rent-free accommodation. So first of all, let's divide that rent-free accommodation into two. Number one, unfurnished accommodation, and number two, furnished accommodation. You tell me, what is unfurnished accommodation? Only the structure with the basic fittings is there. Like light, fan, tiles, etc. will be there. But there are no table, chair, fridge, TV, AC, etc. is not there. Only the structure and fitted items are there. Are you with me? Are you with me? So if it is an unfurnished accommodation, how do we value the perquisite? Under that, you have to divide that into two. Number one, for government employees. If you are a government employee, how do we value the perquisite? Imagine, say, you are we are police department. Okay, we are police department. You tell me whether SI and DGP will get the same standard house. Whether SI and DGP of that respective state will get a house with similar facility. No. The facility which is given to the DGP will be more. And the facility which is given to an SI headquarters or a SI quarters will be less. Yes or no? So for the government, for every quarters, they have a license value. It is called as a fair value. Are you with me? Government will have a value based on a person's designation, experience, degree, etc. He will be given with a house that have higher fair value. Are you with me? Yes. So if you are a government employee, the government will have a basic value for that house. It is called as what? License fees. It is called as what? License fees. So if you are a government employee and your employer have given you a house to live, then you take the license fees determined by the government, and that license fees shall be the taxable value of perquisite. Are you with me? that license fees is just like an annual fair value, not the value of the house, not the entire value of the house. It will be an annual value. Are you with me? That annual value will be taxable in your hands. How to determine the annual value? That is not our subject. That the government will determine and keep with them. We don't have to determine the annual value. Are you all listening? Yes. Are you all listening? Yes. If you are a government employee, then the license fee determined by the government annually shall be your taxable value of perquisite for a year. I hope it is clear. Moving on. What if you are not a government employee? What if you are not a government employee? Again, that have to be divided into two. Number one, house owned by the employer and house taken on lease by the employer. What is house owned by the employer? The employer have a house and it has been given to the employee, and the employee is staying over there without paying any rent. Are you with me? So if it is the house is owned by the employer, you have to divide the valuation into 3 again. You have to divide the valuation into 3. You have to check how much is the population of the city where the house is situated. You have to check how much is the population of the city where the house is situated. If the house is situated in a city where population is more than 40 lakhs, it is an amended area. Earlier it was 25 lakhs. Now they have made it 40 lakhs. If the population of the city where the house is situated is more than 40 lakhs, then how much is the taxable value of perquisite? How much is the taxable value of perquisite? 10% of salary shall be the taxable value of perquisite. Very simple. Listen. Say your employer owns a house, and that house is situated in a city where population is more than 40 lakhs. How do you value the perquisite? You take your salary. Take 10% of your salary, and that 10% shall be the value of perquisite. Are you with me? Are you with me? Now, what is salary? Salary does have a definition over here. Salary does have a definition that we will study later. Are you with me? Are you with me? Salary does have a definition that we will discuss later. For the time being, just forget about the definition of salary. So, moving on. And let's understand what exactly are the other points. Listen. Second one. What is that? If the population of the city where the house is situated is less than 40 lakhs but more than 15 lakhs. What is that? The population of the city where the house is situated is in between 15 and 40. It is not more than 40 and not less than 15. Not less than 15. That means more than 15 and less than 40. In that case, how much is the value? How much is the value of perquisite? 7.5% of your salary shall be the taxable value of perquisite. Are you with me? You tell me, what if the population of the city is less than 15 lakh? If the population of the city is less than 15 lakh, then 5% of the salary shall be the taxable value of perquisite. So very simple, friends. If you are staying in a house owned by the employer, you go check the population of the city where the house is situated. If the population of the city is more than 40 lakhs, then 10% of the salary. If the population of the city is more than 15 but not greater than 40, between 15 and 40, then 7.5%. If the population of the city is less than 15, then 5% of the salary. Are you here? Are you all here? Now the question comes in, what do you mean by salary for this purpose? It is not standard salary. There is a separate definition for the word salary for this valuation. Are you with me? Let's learn that definition of salary and come back. Okay, so the definition of salary is there in the green box. Can you read the green box? Salary includes basic plus DA forms part of the retirement benefit plus all the taxable allowances plus bonus plus commission excluding perquisite and employer contribution to provident fund. Are you with me? Yes. Commission means whether it is expressed as fixed percentage or not. If they are simply saying commission, that means you take the commission. Are you with me? You have to learn this definition. Okay, you have to study this definition. So shall we repeat the definition? What is that? Salary includes basic salary plus DA if forms part of the retirement benefit plus taxable allowances plus bonus plus commission excluding perquisites and employer's contribution to PF. Excluding perquisite and employer's contribution to PF. So these two items you have to exclude. The other items you have to include. Are you with me? Are you with me? Let's read it again. I want all of you to repeat the definition with me. What is that? Salary includes basic salary plus DA form is part of the retirement benefit plus taxable allowances plus bonus plus commission. But don't include any of the perquisites and employer contribution to the provident fund. Don't include these two. Apart from the other things, you have to add. The value that you are getting is said to be the salary. If the employer has given employee a house and the population of the city is more than 40, you take the annual salary and take 10%. But one more thing is there. If the employee have occupied that house only for 1 month, then 1 month salary into 10%. It is not a standard formula, annual salary into 10%. Depends upon how many days that you stayed in that house, you take the proportion, common sense only. Are you with me? Alright, so we'll solve problems, okay, don't worry. We'll solve questions after this. So, is this much clear? This much clear? But not yet over. What if the house is taken on a lease by the employer? Say the house is taken on a lease by the employer. Let's see how to compute the perquisite value. Can you read this box? Where accommodation is provided in a hotel. What do you mean by accommodation is provided in a hotel? In a 5-star or a 4-star or whatever star it is, they have given a accommodation in a hotel. Are you with me? And the employer is paying the hotel bill. Then, how do you value the perquisite? Very simple. Department say you take the lower of either 24% of the salary paid or payable or actual charges payable to the hotel, whichever is lower. So, if the accommodation is provided in a hotel, either you take 24% of your salary or the actual hotel bill, whichever is lower. That means maximum it is 24% of the salary, not more than that. If your actual hotel bill is more than 24% of the salary, then ignore the excess. That's what it means. Are you with me? Are you with me? So how do you value the perquisite if the accommodation is provided in a hotel? You tell me, friends, how do you value? Either the actual hotel bill or 24% of the salary, whichever is perfect, whichever is lower shall be the taxable value of perquisite. I hope it is clear. Is that clear? What if it is not in a hotel? That means it's a proper home, it's a proper house taken on lease by the employer. How do you value? Very simple. Either 10% of the salary or rent paid by the employer, whichever is lower. Either 10% of the salary or the rent paid by the employer, whichever is lower. So in the case of lease, you have to check either it is a hotel or not. In the case of a hotel, 24% of the salary or hotel bill, whichever is lower. In the case of other house, which is taken on rent or lease, then 10% of the salary or actual lease or rental charges paid by the employer, whichever is lower. Is that clear? Perfect. Now, we understood how to value unfurnished accommodation. So, let's summarize how to value unfurnished accommodation. First of all, you have to check whether it is a government employee. In the case of a government employee, then the license fee is determined by the government. Or if it is not a government employee, you have to split that into two, whether the house is owned by the employer or taken on lease or rent by the employer. If the house is taken on, house is owned by the employer and the population of the city where the house is situated is more than 40 lakhs, then 10%. More than 15, then 7.5. Less than 15, then 5%. Are you with me? Are you with me? Perfect. Now, moving on to the next scenario. What is that? Less than or equal to 15. Okay. Less than or equal to 15, then it should be 5% only. Now, moving on to the next scenario, friends. What if the house is taken on lease by the employer? House is taken on what? Lease by the employer. Then if it is on lease and a hotel, if it is a kind of a hotel or something, then 24% of the salary or actual bill, whichever is lower. Normal home, then 10% salary or actual rental charges, whichever is lower. Done, it is it. That's it. Are you with me? Have you all understood the concept? Now what if it is a furnished accommodation? There is an easy way. Anyways, whether it is a furnished or unfurnished, first you have to find out the value of unfurnished accommodation. Then you add the value of the furniture. You will get the value of furnished accommodation. Anyway, structure is the same. Yes or no? So if it is an furnished accommodation, then what you need to do? Listen, in the case of a furnished accommodation, taxable value of UFA. What is UFA? What is UFA? Unfurnished accommodation. You compute the taxable value of unfurnished accommodation first. Then you have to check whether the furniture is owned by the employer or taken on lease by the employer. You have to check what? Whether the furniture including TV appliances as well. Our normal sofa set, bed, refrigerator, TV, washing machine, AC, then whatever it is, whether it is owned by the employer or whether it is taken on lease by the employer. If it is owned by the employer, then what to do? Add 10% of the original cost of furniture if owned by the employer. You take the original cost of that furniture. Say a furniture having a value of 1 lakh rupees have been provided in the premise of employee. Furniture having a value of how much? 1 lakh rupees provided in the premises of employee by the employer. How do you value? For a year, 1 lakh into 10%. What if it is for 1 month? 1 lakh into 10% into 1 by 12. For a year, it is 10% of the original cost of the furniture. Are you with me? And you tell me, what if it is taken on lease? Don't look at the chart. You yourself can say, what if it is taken on lease? The lease rental paid by the employer shall be the value of furniture. Are you with me? That means the higher charges. If in the case of a lease, then you take the higher charges. That is more than sufficient. Are you all with me? Have you understood the concept? Is the concept clear? Great. This is how you have to value the rent-free accommodation. Are you with me? Furniture, if it is owned by the employer, then 10% of the actual cost of the furniture for a year. In the case of the hire, plus higher charges. Whatever the actual higher charges paid by the employer, you have to add. Is that okay? Yes. Is that okay? Perfect. Now there are certain notes. Note number 1. Can you read note number 1? From the above, perquisite valuation, any amount recovered from employee shall be reduced. What do you mean by that? Say for example, first of all, I have to compute the taxable value of perquisite in accordance with the above table. From that value, if actually the employee is paying something, then that something have to be reduced. For example, in the case of a government employee, say the license fees of a property for a year is say 1 lakh. For a government employee, the license fee of a property for one year is how much? Say 1 lakh. The employee is paying 20,000 to the government. The government quarters are absolutely not free. There will be some minimal collection. So the employee is paying 20,000 in a year. Then how much is the taxable value of perquisite? You tell me, how much is the taxable value of perquisite? License value is 1 lakh. Employee every year pays 20,000 to the employer, government, for using that perquisite. You tell me, how much is the taxable value? How much is your benefit? You don't have to pay that 80, and that will be the taxable value of perquisite. Are you with me? So from all the above columns, you deduct the actual amount recovered from the hands of employee. Are you with me? Are you with me? From all the above column, whatever it is, you deduct the actual value or actual amount collected from the employee. Employee only pays the actual value. Are you all with me? Common sense, because only the net amount will be the net benefit earned by the employee. That only have to be the taxable value of perquisite. Are you all listening? Perfect. Now, our population is determined on the basis of census which is conducted as per 2011, because after that there was no census happened in India. So Still now, we are using the census data of 2011. Are you with me? Now I can give you one tip. Do you know the population of all the cities in India? Do you know the population of all the cities in India? Even government also does not know. Right? Because there is no census taken right now. Are you with me? But once in examination, they have given a question. The house is situated in Hyderabad. They have given house is situated in Hyderabad. Do you know the population of Hyderabad? I don't know. I don't know what is the, even the people over there also don't know, because you have to take an official census, then only you will be able to know the population. Yes or no? In the examination question, if it is like this, then what to do? We don't know what is the population of Hyderabad, whether it is more than 40, less than 40, less than 15. We don't know. So what to do? Assume if it is the city is a famous city, then you take the more than 40 lakhs. Because in the question, they have taken, they solved the answer saying that it is more than 40. At that time, it was 25. Okay. From this year onwards, they made it 40. At that time, it was more than 25. So they assume that it is more than 25. This is the only way that you can solve. Because it is impossible for a person to study the population plus don't know the population also. You don't know the population of all the cities right now. For that, we have to conduct a census. So if the city is a famous city, always assume more than 40. Are you with me? Are you with me? Because there are certain situations which we are actually helpless. It is a performance of an impossible, nobody can mandate. So what you can do is more than 40, assume. If it is a famous city. Yeah. If it is not a famous city, then you write your assumption according to you. Because they have never tested such a scenario. The only one scenario that I've seen is Hyderabad. Normally they say the population. Without saying the population, the only ones I've seen that question, they say Hyderabad. Mumbai and all, it is clear. More than 40. Mumbai, Chennai, Kolkata, etc. It is clear that Delhi, more than 40. But Hyderabad, Mangalore, etc. if they say, there will be a problem. We don't know what is the population. So we have to assume only. Are you with me? Are you with me? Perfect. Now there are certain other notes. Let it be here, okay? Let it be here. Let this be here. There are certain other notes and we will finish the other notes right now itself. So other relevant points. Can you read the first blue box under that? Read this first blue box where an employee is transferred from one place to another and is provided with an accommodation at a new place also. The value of perquisite shall be taken for only one such house having lower value for a period not exceeding 90 days. Thereafter, the value of both such houses are taxable. Let's understand what exactly is that point. Very simple. Okay, let's see an example for that particular point. Are you all listening? Are you all listening? Let's see an example. Say, for example, there is an employee, Mr. A. Mr. A is an employee of a particular company. So listen, imagine I am an employee of a particular company, Mr. A. Are you with me? I'm working in Chennai. I'm working in Chennai. Okay. So, say I got a transfer. Immediately my employer called me and I got a transfer to Delhi. I got a transfer to Delhi and my employer told me to join Delhi tomorrow onwards. Are you with me? So the employee said, yes sir, no problem. I will go to Delhi right away. But there is a problem. Shifting all those items from Chennai to Delhi is not that easy. Are you with me? And this employee have been given with a house in Chennai already. Now, from tomorrow onwards, another house in Delhi has also been granted. Since it is an immediate transfer, the employer has provided another house in Delhi. So you tell me, for the next 2 months, he took the next 2 months to transfer all the items from Chennai to Delhi. He took how many months? 2 months, around 60 days to transfer everything from Chennai to Delhi. Are you with me? Now you tell me, for that 2 months, he is using both the Chennai house as well as Delhi house. Both are in his custody. Yes or no? Then normally you have to value both because he is using 2 houses. So you have to value both. Are you with me? But department say not necessary. in the event of transfer, if you are using two houses, one in your old location and one in the new location, up to 90 days, only one have to be the taxable value of perquisite. You can value any one according to your wish. But if you are using both the houses for more than 90 days, from the 91st day onwards, you have to value both. Are you with me? On event of a transfer from the original location to the new location, you are using two houses, both in the old location and new location. Up to 90 days, value only one. If you are using two houses more than 90 days, then from 91st day onwards, value both. And you have to pay taxes for both the values. Are you with me? Are you with me? So let's read that note again. So let's read it together. Where an employee is transferred from one place to another. Transferred from one place to another, and he is provided with an accommodation at a new place. Also, the value of perquisite shall be taken for only one such house having lower value for a period not exceeding 90 days. Maximum 90 days, not more than that. Thereafter, the value of both such houses are taxable. After that, you have to consider both the value of the houses and you have to pay the taxes for both. Are you with me? Are you with me? Is that point clear? Now, another thing. Accommodation here includes fixed as well as floating structure. Say, instead of a house, they have given a houseboat. Value that as well. Instead of a house, they are giving you a houseboat. Value that as well. It can be a fixed structure. It can be a floating structure. Doesn't matter. Accommodation means accommodation. Whether it is fixed or floating or moving or whatever it is. Are you with me? Yes. Are you with me? Perfect. Now moving on to the next one. Can you read note number 1 under this? What is note number 1? In case of hotel accommodation, where the employee is provided such an accommodation for a period not exceeding in aggregate 15 days on his transfer from one place to another, there would be no perquisite. That means from Chennai to Delhi, I got a transfer. And in Delhi, I got a hotel accommodation for 15 days. And in that 15 days, I am using my Chennai property as well. Nothing, no problem. Up to 15 days on account of transfer, if I am getting a hotel accommodation, you shouldn't count that. Are you with me? I got a transfer from Chennai to Delhi. It was an immediate transfer. I didn't have a house in Delhi. So the employer provided me a hotel accommodation for temporary period. And in that meanwhile, they will find a home or a house for me in Delhi. So hotel accommodation provided in the new location up to 15 days, you can ignore. Are you with me? Are you with me? Read that note again. In the case of hotel accommodation, where employee is provided such accommodation for a period not exceeding in aggregate 15 days on his transfer from one place to another, there would be no perquisite. You don't have to value any perquisite. Are you with me? Are you all with me? Perfect. Moving on to the next one. Again, an amendment. There is an amendment happened here. Let's understand what exactly is an amendment. Can you read that note? Where accommodation is on or taken on lease or rent by the employer, and the same accommodation is continued to be provided to the same employee for more than one previous year. The value of perquisite as calculated above shall not exceed the amount so calculated for the first previous year as multiplied by the amount which is a ratio of cost inflation index. CII means cost inflation indexes for the previous year for which value is calculated, and CII for the previous year in which accommodation was initially provided to the employee. Can you read that yellow paragraph again? Can you read that again by yourself? So imagine a case, I'll give you an example for a better understanding. So imagine a case, say you joined in a company in the year 2023-24 and your salary was 10 lakh. Are you with me? Your salary is how much? 10 lakh. Are you all here? Say, in 2025-26, you got a salary increment of say 20%. You got a salary increment of how much? 20%. So your salary become how much? 12 lakh. The salary become how much? 12 lakh. You are staying in a house owned by the employer. From year 1 onwards, you are staying in a house owned by employer. Are you with me? Yes. And you are staying in a house owned by the employer, and the house is in a city where the population is more than 40 lakhs. The house is in a city where the population is more than 40 lakhs. Then you tell me, how do you value perquisite in 23-24? How do you value perquisite in the year 2023-24? You take the salary, then you apply 10% on the value of salary. That 10% on the value of salary shall be the taxable value of perquisite. Are you with me? Yes, sir. So we can say for year 1, it will be how much? 1 lakh. It will be how much? 1 lakh. 1 lakh shall be the taxable value of perquisite. Are you with me? Yes. In year 2, that means in 24-25, we will write 24-25 also. You are staying in the same house. You are staying in what? Same house. But how much is your salary? In 2024-25, your salary is 12 lakh. So, it has to be normal, it has to be 10% of that 12 lakh. Yes or no? But department say no. That is hardship. Rather, what you need to do is, your year 1's value was 1 lakh. Year 1's value was how much? 1 lakh. Then you have to find out the cost inflation indexes. CII means cost inflation indexes. Every year, government notifies CIIs, cost inflation indexes. What is cost inflation indexes? You tell me. What might be cost inflation indexes? Say for example, 2023-24, you have 100 rupees. Can you use that 100 rupees after say 5 years for purchasing same value? Your purchasing power every year comes down due to inflation. So you have today 100 rupees and you are going to a shop and buying some vegetables. After 10 years, can you buy the same amount of vegetables by using same 100 rupees? No, because the price of vegetables will be high. It is called as what? Inflation. So every year based on the inflation, government notifies CII, cost inflation indexes. Are you with me? And 2023-24's cost inflation index, if I'm not wrong, it is 348. Okay. So normally it is like that. So forget about inflation indexes. We will study inflation indexes in the chapter capital gains. It is coming. In the chapter capital gains, we will study the inflation indexes in detail. Are you with me? So the point is, what you need to do is, imagine the cost inflation index for 2023-24. I'll check and tell you. So listen, say the inflation index in the year 2023-24 is 348. This is notified by the CG. And the inflation index in the year 2024-25 is 363. Now, how do you value the perquisite? Very simple. You take that 1 lakh rupees. Then you multiply it with the 363 and divide it with the 348. Can you help me in the math? Year 1's perquisite value have to be multiplied with the index number of year 2 divided with the index number of year 1. Can you tell me how much is the value coming? 1 lakh 4,000 310 will be the taxable value of perquisite. It is not 1,20,000. Rather, in year 2, you apply this index method and compute the taxable value of perquisites. This is what the department says. Are you with me? Are you with me? Is that point clear? So whenever you are multiple years, it started from 2023-24 onwards. Whenever you are occupying that same accommodation in future also, you apply the index numbers on the year 1's perquisite value. So that in year 2, year 3, year 4, you can make use of the index numbers and find out the taxable value of perquisite rather than applying 10% on the latest salary or 7.5% on the latest salary or 5% on the latest salary as the case may be. Are you with me? We'll read that point again. So can you read that particular note again along with me? Where accommodation is on or taken on lease or rent by the employer. The same accommodation is continued to be provided to the same employee for more than one previous year. Then the value perquisite as calculated above shall not exceed the amount so calculated for the first previous year as multiplied by the amount which is a ratio of cost inflation index for the previous year for which the value is calculated and the previous year in which the accommodation was initially provided to the employee. So you have to proportionately inflate the perquisite value rather than computing perquisite value every year. Because there can be an increment in the salary. Proportional to the increment in salary, don't charge any perquisite. From year 1 onwards, you apply the index number and find out the perquisite value rather than inflating the salary value. Are you with me? Are you with me? In examination, if they are asking this, they will give the index numbers. We are actually inflating the perquisite value. So don't do reverse. Don't take that 1 lakh into 343 divided by 368. Not like that. You have to inflate the value. So the numerator have to be the higher index number and denominator have to be the lower index number. Are you with me? Are you with me? This is how you have to value it. And there is one more note. The first previous year means 2023-24 or the previous year in which the accommodation was provided to the employee, whichever is later. So the first previous year here means 2023-24 because this amendment came to the Income Tax Act with effect from 23-24. Are you with me? So we have completed the rent-free accommodation. Now we will discuss a few easier one. Okay, a few easier items that we have to discuss and we will discuss and complete it. So can you read the next heading? That is valuation of benefit of provision of domestic servants. It's a very easy one. Are you all with me? Are you all with me? Read that heading again. Valuation of benefit of provision of domestic servants. What do you mean by domestic servant? It's like a housekeeping staff or a person who's that means what? A chef or a cook have been given or a gardener, something like that. Are you with me? Just like a housemaid. Okay. If the company are giving you a housemaid and the company is paying the salary of that respective housemaid, are you getting any benefit? Company have appointed a chef for you or a cook for you. Are you with me? And company is paying his salary as well. Are you getting any benefit? Of course, yes. What is your benefit? You don't have to pay anything to your chef or housemaid, whatever it is. Your company will pay the amount on account of employer-employee relationship. So you have to value it and you have to pay the taxes accordingly. Are you with me? Are you with me? So friends, let's move on and discuss the other remaining perquisites. Okay. So the point is, so value of benefit of provision of domestic servants. We will divide that into two. Are you all listening? Are you all listening? We'll divide that into two. Number one, if servants are engaged by the employee and wages are paid by or reimbursed by the employer. What does that mean? That simply means I have appointed a housemaid. My employer is paying the salary. Are you with me? I have appointed a housemaid or a domestic servant. My employer is paying the salary. In that case, you tell me how do you value? Very simple. It will be taxable perquisite in the hands of all employees and you tell me how do you value? The value of perquisite shall be total amount of wages paid or reimbursed by the employer minus amount recovered from the employee. What does that mean? Say the monthly salary is 10,000 and the employee is paying only 2,000. The rest will be given by the employer. So how much is the value of perquisite? 10 minus 2. 8,000 shall be the taxable value of perquisite. Are you with me? The total salary paid to that domestic servant minus any recovery from the employee shall be the taxable value of perquisite. Are you all with me? Are you all with me? So moving on to the point, friends. So that housemaid is appointed by whom? employee. Who pays the salary? Employer. Either directly or by way of a reimbursement. Whatever it is, the treatment is same. So moving on to the next part of it. What is the next part of it? If domestic servants are engaged by the employer and the facility of such servants is provided to the employee. What do you mean by that? Say for example, I think I've flipped it. Okay, I think I've flipped it. So I'll explain that again. If the first one is servants are engaged by the employee and it is the salary paid by the employer. Second one, servants are employed by the employer and the salary is also provided. The facility of such servants is provided to the employee. That means facility provided by to the employee. Who pays the salary? Employer. If the employee is paying the salary, we shouldn't discuss it under perquisites. Yes or no? If the employee himself is paying the salary, why the hell we should discuss that under perquisites? Because I am not getting any benefit. Are you listening? So the second case, who appoints the housemaid? Employer. Who pays the salary? Employer. Then how do you value? It will be perquisite in the hands of specified employees only, not in the hands of all employees, only in the hands of specified employees. And how do you value the same? Salary paid by the employer minus any recovery from the employee shall be the value of perquisite. Now the question is, what do you mean by specified employee? Do you remember in the first day when we have discussed perquisites, we have divided the perquisites into three. Number one, perquisites taxable in the hands of all employees. Number two, perquisites exempted in the hands of all employees. Number three, perquisites taxable only in the hands of specified employee. There was a category. Are you with me? Or if we go back to the original thing that we have learned, the third category you can see. What is the third category over here? Perquisites taxable only in the hands of specified employees. Now the question is, this is one of those perquisites. This domestic servant is one of those perquisites where if the employer appoints the domestic servant and the facilities enjoyed by the employee, then it will be taxable only if that employee is a specified employee. Are you with me? But the question is, what exactly is the concept of specified employee? Let's understand what is specified employee right now. So, coming back to the point, specified employee. So, this is what is called a specified employee, meaning of specified employees. Let's understand what exactly is specified employees. Who all are specified employees? Number one, director employee. If the employee is the director of the company, then we call that employee as what? The employee, tell me, specified employee. Are you with me? Say for example, managing director, whole-time director, etc. are directors as well as employees. Those are always specified employees. Second one, can you read the second one? An employee who has substantial interest in the company. What do you mean by substantial interest? Say I am an employee of a company and I owns 20% or more shares in that respective company. Are you with me? I am an employee of a company, but I hold 20% or more shares of that particular company. I am a shareholder as well as employee. I am what? A shareholder of the company as well as an CEO or CFO of that particular company. Then I will be called as a specified employee. Are you with me? And one more is there. What is the third one? That is the comedy. What is the third one? Employee drawing a salary in excess of 50,000 per annum. That means almost everybody is specified employee. 3,000 per annum means monthly salary is way too less. Are you with me? But according to the theory, there are three categories: normal employee, specified employee, and other one. Or we can say three types of perquisites: taxable in the hands of all employee, exempt in the hands of all employee, and taxable in the hands of specified employee. Maybe in examination question they will say annual salary less than 50, not a specified employee, or a specified employee they may mention. So you need to study this split. Are you with me? Practically it does not have any huge implication, but theoretically you have to study this. So, which all are the specified employees? Can you repeat along with me? Specified employees. Number one, Director employee, specified employee. Number 2, employee who has substantial interest in a company, specified employee. Third one, employee who draws a salary of 50,000 per annum, in excess of 50,000 per annum, is also a specified employee. Now, why we have discussed about specified employee? We were discussing about domestic servants valuation. Listen, if the company appoints a servant and it have been provided to the employee, then the value shall be taxable only if it is a specified employee. If the employee himself appoints a domestic servant and the salary paid by the employer, or it is getting reimbursed by the employer, then it will be taxable in the hands of all types of employees. Are you with me? There's a trick to remember. The specified employee and non-specified employee. Imagine, I am your employer and you are my employee. Are you all listening? Are you all listening? There is a trick. I have a thing. I own the thing. Who am I? Employer. I own the thing. I am giving it to you. I own the thing and I am giving it to you. And I am paying all the related expenses of that thing. I own the thing. It can be a domestic servant or a car, whatever it is. I own the thing and I am giving it to you. I am suffering all the expenses and other things in relation to that. In that case, that will be taxable only if you are a specified employee. Are you with me? If you yourself are owning something and you are getting a reimbursement from me, then it will be always taxable in your hands, whether you are a specified or a non-specified employee. Let's check in the case of a domestic servant. So, go to the domestic servant again. And what is the first part of it? If the servants are engaged by the employee, that means you own the servant and the salary paid by the employer, then you tell me it will be taxable whether you are a specified or a non-specified employee. Are you with me? Second scenario, domestic servants are engaged by me. I have the thing and I've given it to you and I pay the salary. Then it will be taxable only if you are a specified employee. If I am giving it to you, then taxability only if you are a specified employee. You yourself are having it and getting a reimbursement from me, then it will be taxable whether you are a specified or a non-specified employee. Are you with me? Are you with me? The next valuation is motor car. There also we can use this theory. There also this theory will work. Are you all with me? Yes. Now you tell me, how do you value the perquisite? Tell me, what is the way to value the perquisite? Very simple. Either you take the, not either, you take the actual salary paid by the employer to that domestic servant minus recovery from the employee. The net shall be the taxable value of perquisite. Are you all here? Are you all here? Moving on, friends. So, the point was, it is all about the domestic servant. Whether it is appointed by the employee or the employer. Appointed by employee, taxable in the hands of all employee. Appointed by employer, taxable in the hands of specified employees only. And who all are specified employees? Directors, substantial interest employees, and employee who is drawing an annual salary of more than 50,000. Are you all with me? So next one is a little bit lengthier one. What is that? Valuation of motor car. If the employer is giving motor car to the employee, how do you value the perquisite? That's what we are about to discuss right now. We have small two charts. This is chart number 1, very small. We have one more chart number 2, that also is small. After that, we have 1 or 2 notes. That also is very small. Are you all with me? But this is very simple. We have considered all the permutation and combination. That's why the chart is little bit big. It's actually very simple only. Are you with me? So let's discuss. What are we valuing right now? What are we valuing right now? Motor car. And let's see how do you value the motor car. So situation number 1. Can you read the heading? When car is owned by the employee, not employer, employee. Maintenance running charges are met by the employee and maintenance and running charges are met by the employer. This is the first alternative. Are you with me? And there can be one more alternative. You tell me. Where the car is owned by the employer and maintenance and running charges are met by the employee or employer. So these are the possibilities that we are about to discuss. Are you with me? Yes. We have created all the permutations and combinations. That's why the chart is a little bit heavy. Otherwise, it is actually very simple and small. But we considered all the permutations and combinations. So let's consider the first chart. What is the first chart? Read it again. The car is owned by the employee and maintenance and running charges met by the employee. Whether the car is used for official purpose, personal purpose, partly for official purpose or partly for personal purpose, nothing shall be taxable as perquisite. Why? My car, my fuel. I will use that car according to my wish. I will use it for official purpose. I will use it for personal purpose. I will mix up official purpose and personal purpose. I am not getting any benefit because the payment is going from my pocket. And hence nothing shall be taxable perquisite. Are you with me? My car, my fuel, my wish. Who are you to tax me? Very simple. Are you all here? Are you all here? First part is over. Chart's first part is over. Okay, va? Moving on. What is the second possibility? Car owned by the employee. Maintenance and running charges are met by the employer. The second possibility is car owned by my car, but employer provides the fuel and he takes care of my repairs and maintenance, or he provides with the driver to my car. Are you with me? In such a case, let's understand how do you value the perquisite. Number one, the car is used for what purpose? Car is used for what purpose? Official purpose. Am I getting any personal benefit? Say, I have a car. My employer suffers the fuel expenses. My car is used for official purpose. Am I getting any personal benefit? No. Am I getting any personal benefit? No, because I'm not using it for my personal purpose. I'm only using it for my official purpose, and nothing shall be taxable as perquisite. Something should be taxable as perquisite, then you should get some personal benefit. Then only it will be taxable as your perquisite. If it is used for official purpose, then employer should suffer the cost. You are not getting any benefit. That is employer's responsibility only. Are you with me? Yes. Are you with me? Yes. So you tell me what is the alternative? Car owned by. Car owned by employee. Maintenance and running charges meant by employer. Used for official. What is taxable? Nothing taxable, because I am not getting any personal benefit. Is that clear? Second one. Car is used for private purpose. Private means official. No, sorry. Personal. Private means what? Personal purpose. Then, how do you value? Forget about the chart. You think and tell me, how do you value? Car owned by me. Complete maintenance and running charges are met by my employer. I am using that car only for my personal purpose. You tell me what is my benefit. That maintenance and running charges met by my employer is my personal benefit. Yes or no? Normally, I have to meet the maintenance and running charges because I am using it for my personal purpose. But my employer is so generous. He is paying all the fuel and the repair and maintenance charges. So you tell me what is my benefit? The actual repair and maintenance charges met by my employer shall be the taxable salary. Are you with me? So actual expenses incurred by the employer is taxable in the hands of all employees. Why all employees? It is my asset. My car. I used it for my personal purpose. Then I get a reimbursement from my employer. Then it will be taxable in the hands of all employees. Are you with me? Are you with me? Perfect. Now the problem starts. What is the problem? Next one is the problem. What is that? Partly for official and partly for private. That means I'm mixing official as well as personal purpose. Then there is a problem. Is it practical to note down every personal travel and official travel? Is it practical? It is possible. Every time when you start the car, you keep a notebook and write, today I am going to where? Hyderabad to see my auntie. Around 600 kilometers expected. It is possible, but not practical. Nobody is going to do that. Are you with me? Even nowadays, people are so lazy to put the key inside and turn. That's why there is push button. Yes or no? People are so lazy to do all these things. That's why technology is supported. Technology is always there for the support. Are you all with me? Yes. Yeah. So you tell me, friends, whether it is practical to note down the purpose of each travel, whether it is official or whether it is personal. Is it practical? It's not practical. So what department say, don't worry. We will give you an equation. We will give you a standard equation. You follow that. Whatever value comes in, that value shall be the taxable perquisite. Are you with me? So if the car owned by the employee, maintenance and running charges met by the employer, and the car is used for official as well as personal purpose, then how do you value the perquisite? You go find out the cubic capacity of the car. What do you mean by cubic capacity? It's called a cc. 1 liter engine means 1000 cc. 2 liter engine means 2000 cc. 3 liter engine means 3000 cc. 1.5 liter engine means 1500 cc. The displacement, the power of the engine. Are you with me? You go find out how much is the power of that respective car. If it is less than or equal to 1.6 liter, that means 1600 cc, then how do you value? You first note down the entire actual expenditure incurred by your employer. Then deduct what? 1800 rupees per month. If driver is also there, deduct additional 900 per month. The rest shall be the taxable value of perquisite. Are you all listening? Are you all listening? So friends, you tell me, how do you value the perquisite? Very simple. You go, first of all, if the car is owned by the employee, maintenance and running charges are also met by the employer. Maintenance and running charges met by employer, and the car is used for official as well as personal purpose. Then do one thing. First, you go find out the cubic capacity of the car. That means the cc of the car or the liter capacity of the car. If it is less than or equal to 1600 cc or 1.6 liter, then what to do? What to do? You note down the actual running and maintenance charges met by your employer. If driver is also there, including the driver's salary, then you deduct how much? Per month 1800 rupees from that figure. If driver is also there, deduct an additional 900 rupees per month from that amount. The remaining value, if any, shall be the taxable value of perquisite. It's a statutory equation. You follow this, remaining amount shall be considered as the taxable value of perquisite, because it is not practical to note down the kilometer on your every journey. So you do follow this equation. This is what the department say. Are you with me? Are you with me? Listen, imagine friends, what if the cubic capacity of the car is more than 1600? What if the cubic capacity is more than 1600? Instead of 1800, you deduct 2400. In the first case, you have to deduct 1800. Yes or no? Yes or no? That if the cubic capacity of the car is less than or equal to 1600. Cubic capacity is more than 1600, then what to do? Deduct 2400. If driver is there, additional 900. Chauffeur means what? Chauffeur means driver. Chauffeur driven car means a driver driven car. Are you with me? Chauffeur means driver. If driver is provided, deduct additional 900. Are you all listening? Are you all listening? So this is how you have to value the perquisite in instance number 1. So let's summarize. Very simple. Forget about the table, chart and all. Listen here. What if the car owned by employee and maintenance and running charges met by the employee, irrespective of use, nothing shall be taxable, because I am not getting any personal benefit. Situation number 2, car owned by employee and maintenance and running charges met by the employer. I am using it for official purpose. Nothing shall be taxable. Why? Because I am not using it for my personal benefit. Situation 2, car is used for personal benefit only. Entire running and maintenance charges met by my employer shall be my taxable value of perquisite, because the entire value is my personal benefit. What if the car is used for official as well as personal purpose? Then you tell me, you find out the cubic capacity of the car. If the cubic capacity of the car is less than or equal to 1.6 liter, 1600 cc. Then what to do? You note down the actual value of expenses met by your employer. From that you deduct 1800. If driver is there, deduct additional 900. If the value of the car is more than 1.6 liter, you deduct 2400 instead of 1800. If driver is also there, additionally deduct 900 also. The remaining value, if there is any, shall be the taxable value of perquisite. Is that point clear? Is that point clear? But the chart is not yet over because we have one more alternative. What is the second alternative? Tell me. Car is owned by or hired by the employer, and the maintenance and running charges met by the employer as well as the employee. That is the alternative that we are about to discuss right now. Are you all listening? So, car is owned by whom, friends? Car is owned by employer. Maintenance and running charges are met by the employer, and the car is used for official purpose, nothing taxable. Why? Because I'm not getting any personal benefit. I'm using that car owned by the employer and running and maintenance charges met by the employer for my official purpose. Am I getting any personal benefit? Am I getting any personal benefit? So, nothing shall be taxable as perquisite. Is that clear? Moving on to the second one. The car is used for private purpose only. Listen. The car owned by employer. Maintenance and running charges met by the employer. And I'm using that car for my personal or private purpose only. Listen. Forget about the chart. Listen. I'll say that I'm getting two benefits. Number one, I don't have to own a car. Number two, I don't have to spend anything for the petrol. As well as I don't have to spend anything for the repairs. Everything is taken care by my employer. Are you with me? So dual benefit. Number one, no ownership. Number two, no maintenance. So if there is dual benefit, then we have to value both and pay the taxes. Yes or no? For the ownership, how do we value? For the ownership, what department says, you take the original cost of the car and for a year, consider 10%. You take the original cost of the car and take 10% for a year. Just like that furniture in the case of a rent-free accommodation. Here also they say, you take the original value of the car, original cost of the car and apply 10% for a year. And for the running and maintenance charges, you add the actual expenses including driver's salary. This both will be the taxable value of perquisite. Are you with me? Are you with me? So you tell me, car owned by? Car owned by employer. Maintenance and running charges are met by employer. And I'm using that particular car only for my personal purpose. Then two benefit. Number one, ownership. Number two, no running and maintenance. You take the actual running and maintenance charges, including driver salary, which is met by your employer. Add 10% on the original cost. That means original purchase price of that car, which is incurred by your employer. Then both the value shall be the taxable value of perquisite, but only if you are a specified employee. Why, you tell me? In this example, who owns the asset? Employer. It has been provided to the employee, and hence it will be taxable only if you are a specified employee. Do you remember the story that I've told you under domestic servant? Servant appointed by the employer and provided to the employee. Likewise, the car owned by the employer and given to the employee. So that will be taxable only if the employee is a specified employee. Are you with me? Are you with me? No, not yet over. Now the problem starts with the third one. What is the third one, you tell me? Partly for official and partly for personal. I'm using it for official as well as personal purpose. Again, they are coming up with some statutory formula. Rather than noting down the kilometer, department say you follow this equation. Whatever sum comes in shall be the taxable value of perquisite. And before that, you need to understand how much is the cubic capacity of the car. So what is the first point? If the cubic capacity of the car does not exceed 1.6 liter, that means if it is less than or equal to 1.6 liter, how do you value? You take 1800 plus 900 if driver is also there. This two will be the total value of taxable perquisite. Earlier they told us to deduct these two figures from the actual value of expenditure. Right now they are saying simply take these two figures. These two figures total shall be your taxable value of perquisite. Are you with me? Are you with me? Don't bother about the actual personal benefit that you are getting. That is impossible to calculate. So do one thing. You take 1800 per month. If the cubic capacity is less than 1.6. And if driver is also there, along with the 1800, you add another 900 per month. Are you with me? Are you with me? What if the cubic capacity more than 1.6? Then instead of 1800, it will be 2400. If driver also is there, additional 900. Are you with me? If driver also have been provided by the employer, then you add that additional 900 as well. This is not a deduction. Rather, they say you take it as the value. Are you with me? Perfect. So what was the alternative? Car owned by employer. Maintenance and running charges met by employer. Personal means value of the car plus running and maintenance charges. Personal as well as official, then 1800 plus 900 if the driver is there, provided the value of the car or the capacity of the car is less than or equal to 1.6. Other case, 2400. If driver is there, additional 900. That will be the value of taxable perquisite. Is that okay? Is that okay? Perfect. Now there is one more alternative. What is the next alternative? What might be the next alternative? Car owned by the employer. Maintenance and running charges met by the employee. That means the maintenance and running charges are met by whom, friends? Repeat. Employee. Car owned by employer. So let's understand what is the alternative. If the car is used for official purpose, nothing shall be taxable because he is not getting any personal benefit. Are you with me? Now, if the car is used for private purpose, then you tell me what is the only benefit that he is getting? In this alternative, car owned by employer, running and maintenance charges met by employee. Are you with me? If it is used only for personal purpose, what is the only benefit that the employee get? He is not required to own the car. He has to spend everything for the running and maintenance, but he is not required to own the car. Ownership is the benefit. Are you all here? So you take only how much? 10% is the original cost of the car. You don't need to add any running and maintenance charges because your only benefit here is you don't have to own a car. Your employer is providing you the car. So what is that? 10% of the cost of the car to the employer or higher charges taxable in the hands of which type of employees? Which type of employees? Specified employees only. Are you with me? Are you with me? Moving on to the last alternative. You tell me what is the last alternative? Car owned by the employer and running and maintenance charges are met by the employee. Car is being used for official as well as personal purpose. Check the cubic capacity does not exceed 1.6. Then instead of 1800, they are only saying add 600. If driver is there, same 900. What if the cubic capacity of the car is more than 1.6? Instead of 600, add 900. And driver is there, additional 900. Are you with me? Are you with me? Perfect. So let's summarize that entire charts. Let's have a summary on the entire charts. So please listen. First one, car owned by employee. Maintenance running charges met by employee. That is the first alternative. Nothing shall be taxable because I'm not getting any personal benefit. Then car owned by employee. Maintenance and running charges met by employer. Car is used for official, nothing taxable. Car is used for personal, maintenance and running charges shall be taxable. Car is used for mix, note down the actual running and maintenance charges. And the capacity is less than or equal to 1.6, then deduct 1800. Capacity more than 1.6, deduct 2400. Driver is there, additional 900. This is it. This is the first chart. Yes or no? When it comes to the second chart, car owned by employer. Maintenance and running charges met by employer. Both are owned by the employer as well as maintenance and running charges met by the employer. Then how do you value? Very simple. For official purpose, nothing. For personal purpose, ownership. That is actual cost into 10% for a year. Plus actual running and maintenance charges met by my employer. If the car is used for official as well as personal, then 1.6 or less, 1,800. If driver is there, additional 900. In the case of 1.6, more than 1.6, then 2,400 shall be the value plus additional 900 in the case of driver. Are you with me? Second case, car owned by the employer. Maintenance and running charges met by employee. Official, nothing. Personal, only 10% because maintenance and running charges met by myself. Official as well as personal, then 1.6 less, then 800 per month. 600 per month. Additionally, 900 if driver is also there. Are you with me? What if the cubic capacity of the car is more than 1.6? Then 900 per month. So 600 and 900 or 900 and 900. Are you with me? Are you with me? Now there is one more note. What is note number 1? Can you read note number 1 under this? While valuing taxable perquisite, any amount recovered from the employee shall be reduced. Stop. What is that? Just like in the rent-free accommodation, if you are actually collecting any amount from the employee, that amount have to be reduced while valuing the taxable perquisite. Are you with me? If you are collecting any amount from your employees, then that value have to be reduced from the taxable value of perquisite. Are you all here? Except when statutory figure are used for valuation. What is that? That 1,800, 2,400, then 600, 900 thing. That is only a lower value. From that, you are not supposed to deduct any actual recovery. Except where statutory figures are used, you can deduct the actual recovery from the employee. Whenever you are using statutory figures for the valuation, you are not supposed to deduct anything from that particular value again. Are you with me? Are you with me? So can you read that note again? There are a few more notes before we conclude and jump into the other provision. What is that big blue note? Can you read this note? So let's understand what exactly is that. Where the employer or the employee claims that the motor car is used for what? Official as well as personal purpose. That means only and exclusively in performance of the official duty or the actual expenses on running and maintenance of the motor car owned by the employee for an official purpose is more than the amounts deductible as per the above mentioned flow chart. So, do you remember, say if the car is owned by the employee, maintenance and running charges are met by the employer. And then what will happen if the car is used for official and personal purpose? From the actual expenditure, you deduct 1,800. If the cubic capacity is less than or equal to 1.6. Other case, 2,400. Are you with me? So let's take an example. Listen. Say, my company has given me with an Innova car. And the running and maintenance expenses in a year is say 2 lakh. 2 lakh is the running and maintenance expenses. Are you all with me? Are you all with me? So the running and maintenance expenses in a year, including the service cost, fuel, everything is 2 lakh. So the car is used for official, predominantly for official, but I am using it for some personal purpose also. Some personal purpose as well. Are you with me? Are you with me? Now you tell me, the car is owned by the employer. Car is owned by whom? Employer. Or we can say employee. Okay, I'll write employee. Car is owned by whom, friends? Employee. Maintenance and running charges met by employer. Are you all here? Are you all here? Then you tell me which chart to follow. Which chart? Which part? Chart number 1. Car is owned by employee. Maintenance and running charges met by employer. Car is used for official as well as personal purpose. Then The cubic capacity of Innova is 2.5 or 3, depends upon the model it is. Either 2500 or 3000. Are you with me? So this will be the alternative. What you need to do is, you note down the actual running and maintenance expenses. That is 2000. Say there is no driver, okay? No driver. And how much you can deduct? 2400 per month into 12 months. How much will be the value? How much is 2400 into 12 months? 2800. You can deduct. How much is the remaining value? 71, not 71, much more than 1,71,200. So the value of taxable perquisite shall be what? 1,71,200. Yes or no? Yes or no? But say in the company, there are certain procedures. Say imagine, say this is the company premises, okay? Imagine this is the company premises. Whenever official car goes through the gate, say the gatekeeper keeps a record. The gatekeeper keeps a record. They will ask what is the purpose of, exit. If it is official, he will mark it as official. If it is personal, he will mark it as personal. There are certain companies where they are so strict in this. Are you with me? So whenever I take this Innova car outside, the gatekeeper is quoting the purpose. Are you with me? And I am sure that out of my 2 lakh, around 1,80,000 rupees is for official only. When I checked the records, I came to know that 1,80,000 is for what? Official purpose only. Only 20,000 rupees I have run for my personal purpose. Yes or no? I have this from the gatekeeper's records. Are you with me? Now what will I do? I will say that only 20,000 is my taxable purpose. But according to the formula that you told, it is 1,71,200. I'll say it is unfair. Are you with me? Are you with me? Because I know that from the company records itself, around 1,80,000 I've run for official purpose. I've only taken that car for personal purpose in a few instances that cost only 20,000 in a year. But according to the valuation method that we have followed, it is around 1,71,200. What should I do? I should do two things. Thing number one, what they are saying is, in such a case, what is step number one? The employer have to maintain complete details of the journey undertaken for official, which may include the date of journey, destination, mileage, and the amount of expenditure incurred thereon. That we have from the gatekeeper's records. Are you with me? What is step number two? The employer gives a certificate to the effect that the expenditure was incurred wholly and exclusively for the performance of official duty. The employer have to certify that 1,80,000 is for what? Official purposes only. If we can do both, I have to show only that 20,000 as my taxable perquisite, not that entire 171,200. Are you with me? If any employee says that after using the statutory figures, my personal expenses is comparatively, actually it is very less. But the equation, according to the equation, it is very high. I can claim that actual personal benefit received only, subjected to two conditions. Number one, my employer should have all the relevant records. Plus, he have to certify that majority expenditure is for official only. If both are satisfied, I can show a lower figure. Are you with me? Are you with me? Yes, this is how it is. Is that clear for everyone? Is that clear for everyone? Can you read that blue table again? Go through that blue table by yourself. Where employer or employee claims that motor car is used for only official duty, or the actual expenses or running and maintenance of the motor car owned by the employee for official purposes more than the amount deductible as per the above mentioned flowchart. He may claim a higher amount attributable to the official use, provided the following conditions are fulfilled. That means he can charge more on official side. That means less on personal side. Subject to two conditions. Condition number one, the employer should have all the relevant records. Plus, employer should give a certificate. More expenditure towards official. If both are satisfied, fine. Are you all with me? So that effectively my taxable perquisite will come down. Because more expenditure is towards official. So that less expenditure only towards personal. So my taxable perquisite will definitely come down. Are you with me? Are you with me? One more note is there. What is the last note? Can you read the last note? Where more than one car is provided to the employee, otherwise than wholly and exclusively for office purpose, the value of perquisite for one car shall be taken as is provided that partly for office and partly for private purpose. And for other cars shall be calculated as cars provided exclusively for personal purpose or private purpose. What does that mean? Listen. Say my company give me two cars, have given me two cars. Okay, my company, say I am Mr. A, and my company have given an Innova as well as a Swift. Are you all with me? Are you all with me? My company have given me an Innova as well as a Swift. I am using both for official as well as personal purpose. I am using both for official as well as personal purpose. Then what department say? If an employee is given with more than one car, out of these two, only one car at my choice can be shown as official as personal. The other car I have to show mandatorily as what? Personal only. So that higher value of perquisite will come. So you tell me which car have to be official as well as personal? Car that has more cubic capacity will have a more higher perquisite value. So it is always better to show Innova as mixed and Swift as personal. Due to that statutory figure effect, if the car's cubic capacity, Innova's cubic capacity is more than 1.6 and Swift's cubic capacity is less than 1.6. So it is always better to show Innova as mix. What is mix? Both for official as well as personal. And the Swift you should show as what? Exclusively used for personal only, even though it is used for official as well as personal. You can show only one car out of that two as mixed. The other one have to be mandatorily shown as a personal car only. Is that point clear? So friends, coming back to the point, now we have to discuss valuation of gas, electricity, water, etc. supplied by the employer. Are you all listening? We are about to discuss how to value gas, electricity, water, etc. supplied by the employer to the employee. Let's understand. So can you read the first box? If gas, electricity or water connections are taken by the employee and the employer paid or reimbursed the employee, it will be perquisite in the hands of all employees. That simply means if the employee he himself takes water connection, gas connection or electricity connection, and this employer is reimbursing the payment or he is making that, paying that bills. In that case, it will be a taxable perquisite in the hands of all the employees. Are you all with me? So we were discussing about what? The gas, electricity, water. So I want all of you to repeat this along with me. If gas, electricity or water connections are taken by the employee and the employer paid or reimbursed the employee, it will be perquisite in the hands of all employees. Water, gas, electricity or water connections are taken in the name of employer and facility of such supplies are provided to the employee. That means employer have the thing and it is given to the employee. You tell me it will be taxable only if the employee is dash employee, specified employee. That's what they are saying. It will be perquisite in the hands of specified employees only. So listen again, the same story. If the employee himself have a gas connection or a water connection or an electricity connection and the employer reimburses the same, it will be taxable perquisite in the hands of all the employees. If the employer have the gas connection, water connection, electricity connection, etc., and it is provided to the employee, then it will be taxable in the hands of specified employees only. Are you with me? Are you with me? Yeah. Perfect. Now, how do you value this? The value of benefit to the employee resulting from provision of gas, electricity or water supplied by the employer shall be determined as very simple. Number one, if supply is made from resources owned by the employer. What do you mean by that? The employer have what? An electricity production company. The employer have an electricity production company. Are you with me? Towards north and all, there are private limited companies who distributes and generates electricity, like Tata Power. So, if the employer himself have an own plant that produces and distributes electricity, and the employees are using it, then how do you value it? Very simple. Manufacturing cost incurred by the employer shall be the taxable value of perquisite in the hands of employee. Are you with me? In a year, say an employee is using 1000 units. Then how do you value it? If the 1000 units is produced from the employer's own capacity, manufacturing cost per unit into 1000 units will be the taxable value of perquisite in the hands of employees. Are you with me? Are you with me? What if it is not from on plant? In other case, a sum equal to the amount paid on that account by the employer. That means if it is from outside premises, then the actual bill amount paid by the employer shall be the value of perquisite. Are you with me? So there are two possibilities. Number one, from own premises. Number two, other cases. From own premises, manufacturing cost per unit will be the value of 1 unit in the hands of employee. In other cases, the actual bill paid by the employer shall be the taxable value of perquisite in the hands of employees. Are you with me? Are you all with me? Is that point clear? Perfect. So let's move on. So from now onward, friends, we have to complete certain set of perquisites. Okay, we have to complete certain set of perquisites. Only after that, I'll be able to make you solve questions. So we have certain target. We have to complete up to here. We have to complete up to deductions. Only after completing perquisites, I'll be able to make you solve questions. Are you with me? Are you with me? So the happy news is the next session is full of theory. That is the happy news that you have. The next session is full of what? Theory. And after completing the theory, I will make you solve questions as well. Are you all with me? So friends, moving on to the next point, that is the next set of perquisites that we should study is what? Can you read the heading? Valuation of free or concessional educational facilities. That simply means if the employer provides free education or concessional education to the children of employee or any other member of his household. The employer provides what? Free or concessional educational facilities to whom? Either to the children of employee or member of his household. Because the employee should not be studying. He is working only. Are you with me? So let's understand how do you value the perquisite. Imagine a case, say I am an employer and your children are studying in my school. I have a school, I run the school. Your children are studying in my school. Are you getting any personal benefit? Your children are studying in my school and I'm not charging anything. Are you getting any personal benefit? Of course, yes. What is the personal benefit? The school fees that you would have paid outside is your personal benefit. Are you with me? The school fees that you would have paid outside shall be the personal benefit. So let's understand how do you value the perquisite. So can you read the first portion of it? If school fees of children of employees or any member of employee's household is paid or reimbursed by the employer on employee's behalf. What do you mean by that? If the school fees, say the employee's children or any member of his household is studying in an outside school, and who pays the bill? Or who suffers or who sponsors that entire education? Employer. In that case, it will be taxable perquisite in the hands of all the employees. If the employee's children or any member of his household are actually studying in a school which is outside, not owned by employer, and employer is paying the entire educational fees, then that fees paid by the employer shall be a taxable perquisite in the hands of all the employees. Are you with me? Are you with me? Perfect. Now, not yet over. What is the second part of it? If education facility is provided in a school maintained by the employer or in a school by reason of its being employment at free of cost or concessional rate. We can simply say a school owned by employer. If the employee's children or member of his household is studying in a school owned by whom? Owned by whom? Employer. It will be taxable purpose only if it is specified employee. Do you remember the story? If something is owned by the employer and it is provided to the employee, then that will be taxable only if the employee is a specified employee. Are you with me? The employee himself is taking an admission in an outside school and the employer sponsors that education, then it will be a taxable purpose in the hands of all types of employees. Are you all here? Are you able to follow what I am saying? Are you getting a clear idea on the topics that we are discussing? Perfect. Moving on with the next one, friends. How do you value the perquisite? Right now, in what types of employees you have to pay the taxes? Right now, let's understand how do we value the perquisite. So, the value of benefit to the employee resulting from provision of free or concessional education facility shall be determined as follows. Let's understand how to value the perquisite. Okay, value. Yes or no? Let's understand how to value the perquisite. Can you read the first box under that? What is that? Free education to children in the school maintained by the employer or education sponsored by the employer. That simply means employees' children are studying in a school owned by employees' children are studying in a school owned by employer. How do you value? Very simple. The cost of education in similar institution in the near locality. That means in the nearby locality, what is the market cost or the semester cost or the normal semester cost? That will be the taxable value of with me. The same school, if others are also studying, what is the amount that they are charging from others? The same amount can be called as the market cost, and that cost will be the taxable value in the hands of employees. Are you with me? Are you with me? Any amount collected from the employee shall be reduced. If you are collecting anything from the employee, you can reduce that portion. Now there is a note. Can you read this note? This is actually a little bit important. What is this? If school owned by the employer and the cost of education per child is less than or equal to 1,000 per month, then not taxable. Listen, school owned by whom? Employer. Who studies in that school? Employees' children. How much is the monthly cost? Less than or equal to 1,000. Nothing taxable. Nothing taxable. But three conditions are there. Number one, school owned by the employer. Who should study? It's employees' children. And what is the cost per month? Less than or equal to 1,000. If employees' brother studies in a school owned by employer. Employees who brother studies in a school owned by employer and the monthly educational expense is less than 1,000, isn't it exempted? No, it is fully taxable because this benefit is only given to the children of employee, not to the brothers and sisters. Are you with me? Yes. What if the employee's children is studying in a school which is an outside school, not owned by employer, outside school, and the monthly cost is less than 1,000? Is it taxable or exempted? Taxable, because for claiming exemption, the house has to be owned by. So not house, the school has to be owned by employer. Who should study? Children, employees, children. And what should be the monthly cost? Less than or equal to 1,000. So on the school, employees, children, less than or equal to 1,000. Are you with me? Then again, let me ask you one simple doubt. What if per month cost is 1,200? What if the employee's children is studying in a school owned by the employer, but the monthly cost is 1,200? How much is taxable? Full 1,200 or the extra 200? Both views are there. Both views are there because Income Tax Act itself is not clear. In most of the examination questions, they provide alternative views. You can consider either only 200 as taxable, or you can say that entire 1,200 as taxable. So, according to me, the better option is 200 taxable. You can say that 200 only taxable. Are With me, because the wordings from Income Tax Act is not clear, and the CBDT haven't come up with an explanation on this as well. So, in practice, we normally follow the excess. Shall be taxable. Up to 1,000 exemption, we normally claim. But in examination, they provide both alternatives. Option 1, only 200 taxable. Option 2, since it is more than 1,000, entire 1,200 taxable. It's up to you which one to follow. Personal one for me, or I suggest personally, you follow for that except 200. That's it. Are you with me? Are you with me? So you tell me to claim the exemption. Which are the three things to note? School. Employees' children should study in that respective school. The cost of education in a month should be less than or equal to 1,000. Are you with me? What about the second one, where educational facility is provided to any other member of its household in an educational institution owned by the employer or in other institution? Then what to do? Cost of such education in a similar institution in the nearby locality minus amount collected from the employee. Very simple. That simply means if employees, other members like brother, sister, etc. studies in an employer or the school, or anybody studies in any other school, how much is the taxable value? The actual fees paid by the employer minus any amount collected from the employee. Are you with me? Are you with me? And what is the note? The benefit of 1,000 not available. Why? For availing it, it have to be the children. Plus the school have to be owned by the employer. And the fee should be less than or equal to 1,000 per month. Is that clear? Is that point clear? So moving on to the next one, friends, that's how you have to value the perquisite in relation to education facilities provided by the employer to the employee or to any other member of his household. Moving on to the next one, can you read the next one? Free or concessional tickets. Let's understand how to value free or concessional tickets. And what is that? If the employer is engaged in transportation system. If the employer is engaged in what? Transportation system, then the amount charged from public for such facility is taxable in the hands of specified employees only. Say, I am an employer. I own a transportation business. For all my employees, you can freely use my transportation facilities. Say, I am a tourist bus, or I runs a stage carriage. Hope you know what is stage carriage. Starts from one point and drops at another point. Say for example, Chennai Hyderabad bus. Stage carriage. Have you heard about stage carriage? Especially in GST, you might have studied stage carriage permits and all. So listen, it is not the normal line bus. We'll start from Chennai. There will be having some specified stops, and the ultimate destination will be, say, Hyderabad, Mumbai, Ernakulam, Kerala, etc., etc., something like that. So, say you are a stage carriage, and for all my employees can freely travel by making use of my facility. Are you with me? My employees and my employees' family members can freely make use of that stage carriage. Now, you tell me, are you getting any benefit? Are you getting any benefit? Yeah. What's the benefit? You don't have to pay anything for the ticket. You will be, so it will be taxable in the hands of specified employees only, because who owns the thing? Employer. And I'm giving you an offer. You can come and travel on my facility, and it will be taxable only if you are a specified employee. And what about in the other case? That means I don't own any transportation system, but I'm sponsoring your traveling tickets. In my company, wherever you travel, I'm sponsoring your traveling tickets. Then the actual cost for the employer for the facility is taxable in the hands of all employees. But don't forget leave travel concession. If it is a tour within India, then you can claim that 10 subsection 5 exemption. You remember 10 subsection 5 exemption? That we have learned today morning, within India, in a calendar year of in a block of 4 calendar years, we can perform up to 2 journeys. If you're performing a third journey, the actual cost shall be fully taxable. Or you're going abroad and your tickets are booked by your employer, everything shall be fully taxable. Are you all with me? Great. And what is not number one? In case above facility is provided to the employees of railway and airlines, nothing shall be chargeable to tax. Railway employees and airline employees can make use of their transport system without paying anything, but nothing shall be taxable as perquisite. For railway employees and airline employees have been excluded from the value of this taxable perquisite. Are you with me? Say I am an airline company and all my employees can make use of my airlines for free travel. You are getting a benefit, but department have no plans to tax that particular benefit. Why? Because this valuation is not applicable for railway and airline employees. Is that clear? Are you all listening? Great. Then, what is not number two? Amount charged from the employee for such facility shall be reduced from the value. That means the actual recovery have to be reduced. If the employee is actually paying anything, that you have to net off. That everywhere you have to net off, except where motor car valuation, where you are using that statutory figures. Apart from there, from every other computation, if there is any actual recovery from the employee, that you have to mandatorily reduce. Only the net is the benefit received by the employee. Are you with me? Perfect. And what is the third one? Conveyance facility provided to the employee for journey between office and residence is also not taxable. Like cab services or free conveyance facility provided by the employer to the employee to cover between office and residence. Nothing shall be taxable. What is conveyance? Arranging a car by way of a taxi or own car given by the company between residence and office shall not be taxable. Especially when it comes to the IT park and all, when you have night shift, they will actually arrange a conveyance facility. They will arrange a cab. If they are arranging a cab, you are getting a benefit, but it is only for the travel between office and residence. Nothing shall be taxable. Are you with me? Are you with me? You tell me what was the point that we have discussed? Free or concessional tickets. What was the first point? Employer owns a transport system and the employee can freely travel. It will be taxable only if you are a specified employee. And in any other case, the actual ticket cost suffered by the employer shall be the taxable value of perquisite. From that, you can always net off any recovery from the employee. You will be. Is that point clear? And this valuation is not applicable for dash and dash. Railways and airline companies. Are you with me? Moving on to the next one. What is the next one? Can you read the next one? Interest-free or concessional loan provided to the employee or any member of his household. What do you mean by interest-free or concessional loan? What do you mean by interest-free or concessional loan? Say the employer is giving a loan to the employee, not charging any interest. Say I am your employer and I am giving what? Loan to you. And I am not charging any interest. You tell me, are you getting any benefit? Are you getting any benefit? If you have taken that loan from outside, you would have paid what? Interest. Now I am giving you a loan without any interest. So that interest advantage is the taxable value of perquisite over here. That interest that you are saving shall be the taxable value of perquisite. Let's understand how to value this and all. So can you read the heading again? Interest free or what is the first part? Interest charged by employer is more than SBI rates. SBI interest rate is considered as the standard interest rate. Are you with me? Yes, what if the employer is charging more than SBI rate? What will be the taxable perquisite? Not taxable. Why? It is better for you to go directly to SBI and ask for a loan because the SBI is charging a lower interest. Your employer is charging something more. Are you getting any benefit? No. Because now you are supposed to pay interest which is more than SBI rates, then you are not getting any benefit. If you are paying an interest which is less than SBI rates, or you are not at all paying any interest, then only you are getting a benefit. Otherwise, you are not getting any benefit. It's a kind of a suffering. Are you with me? Are you with me? So if the interest charged by the employer is more than the SBI rates, not taxable, not a perquisite. Now, what is the other case? Interest charged is lower than SBI rates. What is that? Say SBI is charging 10%. And employer is charging only 2%. You tell me what is your benefit then? SBI rate is 10% and employer is charging only 2%. You tell me how much is your benefit? How much is your benefit? 8%. You are getting a benefit of 8%. So that's what they are saying. If the interest is charged lower than the SBI rates, it is treated as perquisite. The interest at SBI rates to the maximum outstanding balance less interest paid by the employee on that loan. Can you read that box again? Interest at SBI rates on maximum outstanding balance less interest paid by the employee on that loan shall be your benefit. Are you with me? Are you with me? Now the question is, what do you mean by this outstanding balance? What do you mean by outstanding balance? Listen, that means the above outstanding balance means what? So listen friends, the above perquisite is computed on the aggregate outstanding balance for each loan as on the last day of each month. Can you read that note number 2? The above perquisite is computed on aggregate outstanding balance for each loan as on the last day of each month. Are you with me? Are you with me? What do you mean by that? See, when you compute the interest, there can be principal repayment every month. Have you heard about EMI? What is EMI? Equal monthly installment. There will be principal as well as interest portion on the repayment. And the repayment itself will be fixed. That interest and principal portion varies. Are you with me? So I'll give you a full-fledged example for a better understanding of the topic, and I want all to be very, very attentive because it is a very sensitive example and they may ask the same example in examination. They may ask same or similar example in your examination as well. So I'll make use of an example. So listen, there is a company and Mr. A have took a loan from the company. SBI interest rate is say at 10%. Interest charged by employer is say 2%. Are you all with me? How much is the SBI interest rate? 10%. And interest charged by the employer is 2%. Now listen. Say on 1st April 2024, outstanding loan balance was 10 lakh. On 1st April 2024, how much is the outstanding loan balance, friends? How much is the outstanding loan balance? It was 10 lakhs. Are you all with me? Are you all listening? Perfect. Now, say there is a monthly repayment. This loan is getting repaid monthly. This loan is getting repaid monthly. So every month, this particular employee is paying 50,000. 50,000 is the repayment towards principal. And it happens on 5th of every month. It happens on when? 5th of every month. Are you with me? Are you with me? So I'll repeat that example. And the company is there. The company is charging an interest of how much? 2%. Employee Mr. A have taken a loan of rupees 10 lakh. And how much is the interest liability or the interest charged by the State Bank of India? You with me? Now, when you come to that particular valuation again, let's go to that valuation. Can you read this part of the valuation? interest charges lower than SBI rates, it is treated as a perquisite. How do you value the perquisite? Interest at SBI rates on maximum outstanding balance less interest paid by employee on that day. So the question is, what is this maximum outstanding balance? Note 2 is there. The above perquisite is computed on what value? Aggregate outstanding balance for each loan as on the last day of each month. So every month you have to compute the concessional interest benefit. Let's see. So tell me friends, what was the outstanding loan balance as on 1st April 2024? What was the outstanding balance? What was the outstanding balance? So on 5th of April, there will be a repayment. Because every month, 5th, there is a repayment. Yes or no? On 5th of April also, there will be a repayment of how much? How much? So tell me, on 30th April, how much is the outstanding loan balance? 9,50,000 is the outstanding loan balance. Are you all with me? Yes. On this 9,50,000, you have to compute the concessional interest for the month of April. Are you with me? Because the concessional interest rate is charged on the outstanding balance of loan standing on the last day of every month. This is how you have to compute. Are you with me? Yes. Are you with me? Yes. So on 9,50,000 into, how much is the concessional rate of interest? SBI charges 10%. Employer charges 2%. So you tell me how much is the concessional rate of interest? How much is the concessional rate? Into 8% into 1 by 12. 8% is for a year. You have to convert it into a month. So can you help me with the math? 6,333. Are you with me? Now, on 5th of May also, there will be another repayment of how much? 50,000. Now, can you tell me on 31st May, how much will be the balance? 9 lakhs. Into 8% into 1 by 12 for that month. How much will be the interest benefit? 6,000. Now, on 5th June also, there will be another 50,000 repayment. And how much will be the outstanding loan as on 30th June? 8,50,000 into 8% into 1 by 12. Can you help me with the math? 5,667. 66 or 67, both are fine. Then on 5th of July also, there will be an outstanding repayment of, there will be a monthly repayment towards the principal, that is 50,000. So how much is the outstanding loan as on 31st July? 8 lakh. Into 8% into 1 by 12. Can you help me with the math? 333. As you can see, it follows a trend. Every month 50,000 is the repayment and it follows the trend. And can you tell me how much will be the interest for August? It will be 5,000. For September, it will be 4,667. Then October, 4,333. November, 4,000. December, 3,667. Then next year, January, 3,333. Then February, 3,000. And March, 2,667. And can you help me? How much is the total concessional interest that you are getting? Total concessional interest starting from 6,300, 6,5667 and adding everything together. How much is the total concessional interest that you are getting? Alright, so how much is the total concessional interest that you are getting? 54,000. Are you all with me? This is how you have to compute the concessional rate of interest. So every month and outstanding principal balance you have to apply the concessional interest rate. Then you have to total for the entire 12 months and compute the taxable value of perquisite if there is a monthly repayment. If there is no monthly repayment, nothing. Don't worry. You can apply that 8% on the entire outstanding loan balance in a go. Are you with me? Yes. If there is no monthly repayment in the question, don't worry. You take the total outstanding loan balance, apply that concession rate of interest, and you will get the taxable value of perquisite. Are you all listening? Yes. But in examination, 100% sure if they are testing this, there will be monthly repayment. What is the purpose of giving this adjustment? Okay. In examination, if they are planning to ask a question from this, definitely there will be monthly repayment. Are you all with me? Are you all with me? So this is how you have to compute the rate of interest. Now, there is another note. Any interest charged from employee shall be reduced from the above determined value. That already we have considered. SBI value was 10. Employer charged 2%. So the concession is only 8%. Are you with me? Perfect. Now there are certain exceptions to this point. Can you read the exception? Exception to the above perquisite. That is, however, no value would be charged in the following two scenarios. What are the two scenarios? Number one, if such loans are made available for medical treatment in respect of prescribed diseases like cancer, tumor, etc. The employee is having some prescribed diseases. That's why employer have given a interest-free loan. Will the income tax go and compute the perquisite and demand taxes? No. Income tax is not that cold-blooded, okay? They will say, don't worry, I know your problem. So we are not taxing any perquisite in your hands. Are you with me? Yes. If the loan given by the employer to the employee is on account of medical treatment in relation to prescribed diseases, nothing shall be taxable. We are waiving off our right to levy the taxes. And one more situation is there. What is the second one? Where the amount of loan are not exceeding aggregate 20,000. That means in a year, the total amount of loan outstanding is less than 20,000. Then also department have no plans to tax any perquisite. The principal portion, if it is less than 20,000, that means the advance that you have taken is say 15,000 or 18,000, something like that. Then nothing shall be taxable. In aggregate, what do you mean by in aggregate? You will take 10,000 rupees of loan 10 times. Then what is the aggregate? 1 lakh. Then you have to compute the concessional rate of interest. It's not one single loan. On aggregate, if the total amount does not exceed 20,000, total amount of loan taken by an employee from an employer does not exceed 20,000, nothing shall be taxable. Is that clear? Yes. Is that clear? So this is how you have to value the interest-free or concessional loan provided to the employee or member of any household. There is no distinction between specified employee and normal employee. Whether you are a specified employee or whether you are a normal employee, this will be fully taxed. Are you with me? So moving on to the next one, what is that? That is traveling, touring and accommodation provided to the employee or any member of his household other than leave travel concession. Apart from leave travel concession, if the employer is giving or sponsoring any other tour of employee, how do you value the perquisite? And that's what we are about to discuss in this chart. Are you with me? Are you with me? This chart is actually a common sense chart. There is nothing special in this chart. It is very easy. So read that heading again. Traveling, touring and accommodation provided to the employee or any member of his household other than leave travel concession. Number one, can you read the first alternative? Where such facility is maintained by employer and it is not available uniformly to all employee. Then how do you value? Perquisite shall be value at which such facilities are offered by other agencies to public. Simple example I can tell you. Have you heard about Mahindra Holidays? There is a holiday and touring company called as Mahindra Holidays. Say for example, Mahindra Holidays. They have lot of resorts and other property in different part of India. Are you with me? Say we are Mahindra Holidays and you are the employees of Mahindra Holidays. Are you with me? And I'm giving an offer to my managerial level employees. What is that offer? You can go and stay in any of our property for a week for free. You can go and stay in any of our property for a week for free. Are you getting any benefit? Are you getting any benefit? You all are the managers. Okay, you all are the managers. And there are other staffs also. Only those managerial level employees can take this offer. You can go, pick the location, stay for a week and pay nothing and go. This is what is the offer. So you tell me, are you getting any offer? Sorry, are you getting any benefit? What is the benefit? You can stay in a resort for a week without paying anything. Why? Because of our employer-employee relationship. Are you with me? Yes. Are you with me? So how do we value that perquisite? Very simple. What is the cost for staying in that particular property for a week? That will be your taxable value of perquisite. Yes or no? What is the cost for staying in that respective property for a week? That cost will be the taxable value of perquisite in your hands. That's what they are saying. Yes, where facility is maintained by the employer, my own resort, and is not available uniformly to all employees. It is not available for everyone. Only selected employees can enjoy this. Then perquisite shall be value at which such facilities are offered by other agencies to the public. What exactly is the normal cost, market value of that 1 week stay over there? That shall be the taxable value in your hands. Are you with me? Yes. Have you understood what I said? Have you understood what I said? Perfect. Moving on to the second one. Can you read the second one? Where employee is on an official tour and the expenses are incurred in respect of any member of his household accompanying him. Listen, say we are a company and say we are a pharmaceutical company. Are you all listening? We are a pharmaceutical company. There is a medical conference happening in Italy. There is a medical conference happening in Italy. I am sending you for attending the medical conference. Your flight ticket, stay abroad, traveling, other thing, everything is sponsored by the company. So now you tell me, are you on a personal tour? Are you on a personal tour? You are fully on an official tour. Are you with me? Yes. So all the expenses met by me shall not be a taxable perquisite in your hands. Why? Because you are not enjoying any personal benefit. It is only an official trip. Are you with me? Are you with me? It is only an official trip. So nothing shall be taxable as what? Perquisite. But along with you, you took your husband. Along with you, you took your husband. Whose husband? Your own husband. Are you with me? Hello? Are you all here? Along with you, you took your husband. Now you tell me the cost of husband, the cost of traveling cost and staying abroad, etc. The cost of husband shall be a taxable perquisite. You cannot buy husband, okay? Obviously, cost means what cost? Traveling and other costs incurred for your husband's trip shall be fully taxable perquisite if that is also reimbursed by the employer. Are you with me? You go for official trip alone. Don't take husband, whether it is yours or somebody else's. You are not supposed to take your husband along with you. Are you with me? Are you with me? So, what is that particular point where an employee is on an official tour and the expenses are incurred in respect of any member of his household accompanying him? Then how do you value the perquisite? The amount of expenditure so incurred for the accompanying member of his household. That is the cost of your traveling and boarding and other costs incurred for the husband shall be the taxable value of perquisite. Are you with me? Are you with me? Perfect. So this is how you have to value the perquisite. How about the next one, where official tour is extended as a vacation? So the medical conference is for 3 days. You came back after 7 days. Then what will happen? The medical conference was for 3 days. You came back after 7 days. Then that extra 4 days cost sponsored by the employer shall be your taxable perquisite. Yes or no? 3 days conference means you have to come back exactly in the evening of the 3rd day, or maximum by next month, next day morning, not next month, okay, next day morning. Are you all here? If it is extended as a vacation, then all the costs incurred by the employer for that particular your vacation shall be fully taxable in your hands. Are you with me? Yes. And let's read that the value will be limited to the expenses incurred in relation to such extended period of stay or vacation. That extra day's stay cost will be your taxable value of perquisite. The 3 days is okay because that is proper official trip. That extra 4 days that you have incurred, whatever the cost that is you have incurred, reimbursed by the employer, shall be fully a taxable perquisite. You are listening? Are you all listening? What is the last one? In any other case, that means in any other situation, the amount incurred by the employer. Say for example, he took a foreign tour. He booked a foreign tour for you. It's a full personal free tour. All the costs incurred by the employer shall be fully taxable as perquisite in your hands, whether you are a specified employee or not. Are you with me? Are you with me? So let's summarize. What was the first point? Where a facility is owned by the employer and it is available only to a few selected employees, then the market value of that facility shall be the taxable perquisite. Point number 2, where the employee is on an official trip and there is an accompanying member along with the employee. Whatever the cost incurred for the accompanying member shall be the taxable value of perquisite. An official tour is extended as a vacation. That extra cost incurred for the extended days of stay shall be your taxable value of perquisite. In any other case, whatever amount incurred by the employer shall be the taxable value of perquisite. Are you with me? Basically, you wouldn't have to study this. This is only common sense. Yes or no? This is only what? Common sense. And there is nothing to study. And there is a note. What might be the note? Any amount charged from the employee shall be reduced from the above determined value. Whatever amount that you are charging from your hands of employee have to be reduced from the above value for taxing the perquisite. Is that point clear? So that is how you have to value traveling, touring and accommodation provided to the employee. And moving on with the next one, again comparatively important item. Can you read the heading? Free or concessional food and non-alcoholic beverages. Say the employer is giving either free food or concessional food or non-alcoholic beverages. What do you mean by non-alcoholic beverages? Tea, coffee, cool drinks, etc. You know what is alcoholic beverage, right? Okay, fine. All right. All right. So moving on with the item number 1 under that. What is the item number 1? Tea, snacks and other non-alcoholic beverages in the form of light refreshment provided during office hours. What is that? Your employer is giving you a tea and one vada for free. You are getting a benefit, but nothing shall be taxable. You will be. Your employer is giving you from some what? Light refreshments in the form of either tea, coffee, cool drinks, etc. Or some basic snacks like vada, banana fry, biscuit, etc. Something like that. If they are giving, nothing shall be taxable. Are you all with me? One full chicken biryani, is that a light refreshment? No. That may be light for you, not for income tax department. Okay. So light refreshment means strictly light refreshment. Are you with me? Then not taxable. Then what is the second one? Free meals provided during office hours in a remote area. What do you mean by remote area? What do you mean by remote area? Say for example, not easily accessible. Say for example, our company is in Chennai. Our company is in Chennai. But there is a project in Satyamangalam forest. Okay, we have some project in Satyamangalam forest. So I am sending you to that dense forest. Are you with me? I am providing you free meals over there. My team will come over there and they will provide you free meals. Are you with me? Nothing shall be taxable. Because it is only due to that inconvenience I am providing you the free meals and it is not considered as any taxable purpose. Are you with me? And what is the next one? An offshore installation. What is offshore installation? Onshore means in India. Offshore means outside India. So you are working in an offshore installation outside India and I'm providing you free food over there. Again, nothing shall be taxable. Are you with me? So in a remote area as well as in an offshore installation, if the employer is giving free food to the employee, nothing shall be taxable as perquisite. Are you with me? Even if it is a heavy food, like a heavy meals like biryani, fried rice, then whatever it is, nothing shall be taxable. Are you all here? Perfect. So, what is the third one? Can you read the third one? Free meals provided by the employer during office hours, at the office or business premises, or through paid vouchers, which are not transferable and usable only at eating joints. Either the employer himself provides free meals, or the employer gives you vouchers or tokens where you can redeem the vouchers in hotels or restaurants. Are you with me? There are meal passes called as Sodexo meal pass. Sodexo. There are certain restaurants which accepts Sodexo meal pass. You can show that KFC and all will accept this Sodexo meal pass. If you have a Sodexo, that is a brand Sodexo. If you have that meal pass, the value of the meal pass will be 50, 80, 90, 100, 120, etc. You can go with that meal pass, redeem it, and have food. Are you with me? Certain companies are giving meal passes like this. Are you all listening? Are you all listening? Certain companies are giving what? Meal passes like this. And if the value of meal pass per meal does not exceed 50 rupees, nothing shall be taxable. Nothing shall be taxable. You will be, if the value of meal pass or if the value of the meal provided by the employer to the employee is more than 50, you tell me what will happen? Excess shall be taxable. Say for example, an employer have given 300 meal passes in a year. Each meal pass costs 75 rupees. Each meal pass cost was how much? 75 rupees. Can you calculate the taxable value per cover here? 300 meal passes given. Each value of meal pass is 75 rupees. Can you calculate the taxable value of perquisite? So you tell me how much is over and above 50? 25 rupees. Yes or no? Into how many meal passes? 300 meal passes. So you tell me how much is the value? 7,500 rupees is the taxable value of perquisite. Are you all with me? So friends, we were in between what? Free or concessional food or non-alcoholic beverages. So we will continue. Okay. So we will be discussing about what? That 50 rupees per meal. Are you all with me? So if the employer is providing free meals to the employee either directly or through meal vouchers, then how much is the exemption? Up to 50 rupees per meal. If the value exceeds 50, then excess shall be the taxable perquisite. Are you with me? To claim this 50 rupees per meal, this meal should be provided during office hours. Are you with me? To claim this 50 rupee per meal, this meal should be provided during office hours. What if the employer is providing morning breakfast and late night dinner? Then it will come under any other case. Then what will happen? Actual expenditure to the employer minus amount charged from employee shall be the taxable perquisite. Are you with me? In any other case, the rest of the amount, the actual amount charged from the or actual amount incurred by the employer minus any recoveries from the employee shall be the taxable value of perquisite. I hope that is clear for you. Is that point clear for everyone? Perfect. So there are different instances where you have to value the perquisite. We can simply sum it up within 2 minutes. Number one, tea, snacks, or other non-alcoholic beverages in the form of light refreshment, nothing taxable during office hours. Then number two, free meals provided during it is at remote location or offshore installation, nothing taxable. Or meals provided during office hours up to value of 50 rupees, either directly or by way of paid vouchers. Then nothing shall be taxable. Over and over 50, excess shall be taxable. Then what is the last one? Any other case, actual amount incurred by the employer minus anything collected from the employee. That net amount shall be the taxable perquisite. Is that all clear? Is that all clear? Perfect. So moving on to the next perquisite. These are easy ones only. Okay, there is nothing complicated in this. Moving on to the next one. So can you read what is the next one? Value of gift, voucher, or token in lieu of such gift. That is sub rule number 7, rule number 4, or rule 3. So sub rule number 7(4) of rule 3. Let's understand. Say the employer. So you are my employees. Are you all with me? You are my employees, and your employer. I've given you a gift. I've given you a gift. Are you with me? If I'm giving you a gift on account of employer-employee relationship, then the value of the gift shall be taxable in your hands. As what? Perquisite. You are my employees and I am your employer. I'm giving you a gift. It can be a money gift or it can be any other gift like jewelry, valuable articles, etc. Whatever the thing that I'm giving you shall be your taxable perquisite. And let's understand how to value it. So, what is the first box? Can you read the first box? The value of any gift, voucher, token given to the employee or any member of his household on a ceremonial occasion or otherwise. What is ceremonial occasion? Maybe your marriage or your daughter's first birthday or your son's first birthday or your husband's birthday or your wife's birthday or your father's birthday, whatever it is, or simply I visit your home and have given you a gift without any reason. That is what they are saying on ceremonial occasion or otherwise. Or on Diwali, I visit your house and have given you a gift. Then also there will be taxability. Then the employer shall be taxable in the hands of all employees. Gift given by the employer shall be taxable in the hands of all employees. Are you with me? Are you with me? However, gift voucher or token up to 5,000 in aggregate during the previous year shall be exempted. Say the value of the gift given by me to you is less than or equal to 5,000, then nothing shall be taxable. What if the value is 6,000? 1,000 taxable or fully taxable? What if the value is 6,000? 1,000 taxable or fully taxable? There are two views. Number one, 1,000 taxable. Number two, fully taxable. You can see this alternative answer in your examination questions. Are you with me? You have to write that note. 5,000. I'm assuming that only excess taxable. That is the better way. Only excess taxable is the better way. That's what we follow when we file return. Are you with me? But according to the ICAI, we have two methods. Number one, fully taxable. Number two, excess taxable. So both are fine. But there is one thing. If the employer gives cash, then full amount is taxable. Purposes there is no benefit of 5,000. I've given you some money as gift. Then fully taxable. You will not get the benefit of 5,000. If the gift is other than money only, up to the value of 5,000 shall be exempted. Are you with me? I'm giving you money, rupees 4,000. Is it taxable or not taxable? Fully taxable. I've given you a jewelry worth 4,000. Is it taxable or not taxable? Not taxable. Why? Because money directly given as gift shall be fully taxable without any exemption. But other than money, you can claim an exemption up to 5,000. Is that clear? Perfect. So this is how you have to value the gift. Isn't it simple? Isn't it simple? Money gift, fully taxable. Other gift, up to 5,000, exempt. Whether it is given on a ceremonial occasion or next is credit card expenses. Let's see how to value credit card expenses given as perquisite. Are you all listening? Now, read the first one. Where such credit card is used wholly and exclusively for office purpose. Say, I am your employer and you are my employee. I have given you a credit card. You can use that particular credit card whenever there is an official purpose. For all official payments, you can use that particular credit card. You tell me, are you getting any personal benefit? Are you getting any personal benefit? Nothing. Why? Because it is only used for official purposes, yes or no? And hence you are not getting any personal benefit and nothing shall be taxable but subjected to two conditions. Condition number one, complete details in respect of the expenditure are maintained by the employer and the employer gives a certificate for such expenditure showing such amount has been used for the performance of official duty. I have to maintain two things. First of all, I should have a complete detail on all the expenses that you are incurring. Plus, I should give you a certificate stating that all the expenditure are official only. If you have this both, then no problem. Nothing shall be taxable. Are you with me? I've given you a credit card. Who am I? Who am I? I'm your employer. Who are you? And I have given you what? Credit card. You can use it only for official purpose. Then nothing shall be taxable purpose. Subjected to a condition that I should have all the details of all the expenditure that you are incurring. Plus, I should give you a certificate stating that all the expenditure are official only. If both are okay, nothing shall be taxable. Is that clear? What if you are using that particular credit card for your personal purposes? What if you or your members of household are using it for what purpose? Personal purpose. Then you tell me what will happen. The actual bill paid by the employer shall be fully taxable, minus any recovery from the employee. Yes or no? If the credit card is used for personal purpose only, the actual bill amount that I am paying shall be fully taxable, minus any amount recovered from the employee. Let me ask you one doubt. What if you are using that particular credit card for official as well as personal purpose? What if you are using that particular credit card for official as well as personal purpose? Then what will happen? Nothing. You take the bank statement. You can easily bifurcate. You don't require any statutory formula. It's not like motor car. Are you with me? If you're using that particular credit card for official as well as personal purpose, you download the bank statement. From that, employer have to certify that these are official. The rest only will be the taxable purpose. Is that clear? Is that clear? So this is all about the credit card expenses. I hope it is clear. So I hope that point is clear for you. Moving on. Yet another important item is coming. That is use of movable assets. Are you all listening? Are you all listening? Let's understand how do we value movable assets. So friends, listen. What is the first one? Say I am your employer and you are my employee. I've given you laptop and computers. I've given you what? I have given you what? Laptop and computers. You're using that laptop and computer for your personal as well as official purpose. At office, you will make use of it. At home, you will watch some movies, surf through internet, etc., etc. Watch Netflix, etc., etc. Are you with me? Yes. Now, are you getting any personal benefit? Yes, because you wouldn't have to buy a laptop. You can use it for your personal purpose as well. Are you with me? Yes. But department say no problem because the predominant usage is only official. You might be using that laptop for some time for your personal purposes. Nothing shall be taxable. If the employer gives laptop or computer to the employee for official as well as personal use, nothing shall be taxable. There is no transfer of ownership. Okay, this is just for usage. Are you with me? Yes. Once you are resigned from the company, you have to submit that laptop. Are you all here? The laptop is not given to you forever. Whenever you are my employee, I will give it. Otherwise, you have to submit it. Is that point clear? So, laptop and computers, always the value shall be nil. It is use of movable assets, not transfer of ownership of movable assets. For transfer of ownership, you have another table coming. Are you with me? Yes. How about the other assets? Apart from laptop and computers and assets already specified. What is this assets already specified? Apart from, that is mobile assets, other than laptop and computers and assets already specified. Motor car that we have already seen. Motor car is also movable asset. So, no. Then, apart from laptop and computer and motor car, if the employer is giving that asset to the employee, like refrigerator, washing machine, TV, AC, etc. is given, we have already studied it under furnished accommodation. Tell me, how do you evaluate? 10% of the original cost of asset. Yes or no? For a year. If it is taken on rent, then actual rent charges paid by the employer. Are you with me? It is the same thing only. I have written it over there by showing it as furnished accommodation. Are you with me? Both are one and only same. Are you all here? So 10% per annum of the actual cost of the asset or the amount of rent or charge paid or payable by the employer as the case may be. Are you all with me? Are you all with me? Now there is a note under that. Can you read that particular note? Where? In respect of an asset. Where the employee is paying any amount in respect of such asset, the amount paid shall be deducted from the value of perquisite determined amount. If there is any recovery from the hands of employee, then you have to net off that particular. That point clear? That's simple as that. So the asset valuation, the perquisite valuation was use of movable assets, and we have covered laptops and other assets. Laptops, nothing taxable. Other assets apart from motor car, 10% of the original cost of the asset. If it is taken on rent by the employer, then the actual rental charges minus any recovery from the employee. Is that clear? Isn't it simple? The only problem is there are a lot of perquisites. There are a lot of perquisites that we have discussed. Each and every one individually is very simple only. But you will get a combination question in exam. After completing this as well, after completing this, I will make you solve some combination question. 2 more perquisites before the question. So, what is the next one? Can you read the next one? Transfer of movable assets. Let's understand what is this transfer of movable assets. You tell me, what do you mean by transfer of movable assets? There, ownership is getting transferred from the employer to the employee. Ownership is getting transferred from the employer to the employee. Are you with me? Number 1, computer and electronic items. Computer and what? Electronic items. How do you value? You take the actual cost. Employer bought a computer. Then after 2 to 3 years of use, I transferred that computer in your name. I told you to take it. Are you with me? Then you are getting a benefit. Even though it's a second-hand computer, you are getting a benefit. That also have to be valued. And let's understand how to value it. What is the first step? Actual cost for the employer. Then less what? Depreciation at 50% for every completed year under WDV method. The employer used it for 2 years. So you have to deduct depreciation at 50% under WDV method for 2 years. Then less amount recovered from the employee. The remaining shall be the value of perquisite. Can you read that first box by yourself? Actual cost less Depreciation at 50% for every completed year under WDV method, less amount recovered from the employee. Let's take an example, okay? Say for example, say I bought an laptop in year 1, say for 1 lakh rupees. For what value? 1 lakh rupees. I use it for 2 years. On third year beginning, I transferred that particular laptop in your name and you paid me say 15,000 rupees. You paid what? 15,000 rupees to me. How do you value the perquisite? Let's understand how to value the perquisite. Are you all listening? Yes. How do we value perquisite? First you take the actual value of the laptop. How much is the actual value of the laptop? 1 lakh. How many years I've used that laptop? 2 years. Year 1 and year 2. On third year beginning, I've transferred it to you. Year means completed year. Ignore the fractions. Are you with me? 2 year and 6 months. What to do? 2 year. Ignore the 6 months. Now, so for year 1, how much should be the depreciation that should be deducted? 50%. 50% means 50,000. How much is the WDV? 50,000. Then for year 2, 50% on 50,000. That is what is called WDV, written down value. So 25,000 you have to deduct. How much will be the remaining value? 25,000. And what is the amount recovered from the employee? 15,000. Yes or no? Now you tell me how much is the taxable value of perquisite? 10,000. 10,000 shall be the taxable value of perquisite if I am transferring laptop. Are you with me? Are you with me? So how do we value transfer of laptop and other electronic items? Tell me, you take the actual cost first. Then for every completed year of usage, you deduct 50% depreciation on WDV basis. From the remaining value, if the employee have paid something, you deduct that. If there is anything balance, that balance shall be the taxable value of perquisite. What if in the same example, employee have paid 30,000? What if in the same example, the amount recovered from the employee is 30,000? Nil. Why? According to the income tax law, the value is only 25. Employer collected 30. What is the benefit? Benefit for employer only. No, not for employee. So nothing shall be taxed. Is that clear? Moving on with the next one, not yet over. What is the next asset? Motor car. Earlier in the chart, we have discussed the usage of motor car. We haven't discussed anything related to the transfer of ownership. Now we are about to discuss the transfer of ownership. Are you with me? Yes. Are you with me? Now we are about to discuss the transfer of ownership of motor car. So let's understand how to value the motor car. So tell me, what is the first step? Actual cost less depreciation at 20% for every completed year under WDV method, less amount recovered from the employee. The remaining shall be the taxable value of perquisite. Again, one simple example. Employer had a motor car, costed 10 lakh. Used it for 2 years. On third year, he transferred that motor car for say 50,000. 50,000 rupees to the employee. Are you with me? So you tell me, how do you value? First you write down actual cost, that is 10 lakh. So for year 1, what should be the depreciation? 20%. How much is 20% on 10 lakh? 2 lakh. So how much is the WDV? Again, one more year's depreciation you have to deduct because they have used it for 2 years. So year 2 at 20% on 8 lakh means how much? Come again? 160. You deduct that, how much is the remaining value? 640. From that, how much is collected from the employee? Only 50,000. How much is the remaining value? 5,90,000 shall be taxable in the hands of employee. Are you with me? Yeah. Whether you are specified employee or not, this 5,90,000 shall be fully taxable. Is that point clear? Yeah. This computation is the statutory method and you have to mandatorily follow this. Irrespective of the rate of depreciation followed by the employer, you have to always apply this rule for the purpose of valuation. Are you with me? Moving on. What is the last type of asset? Other asset. Can you tell me an example for other asset? TV. We can say TV, but don't confuse. They are saying computer and electronic items over here. What is that electronic item? Listen, computer and electronic item means the items that have nexus with computer, like printer, scanner, UPS, etc., monitor, etc. Are you with me? Yes. So there is the note given by me here. Electronic gadgets include computer, digital diary, printer, but exclude washing machine, microwave ovens, mixers, hot plates, ovens, etc. That will come under other assets like washing machine, fridge, AC, TV. If it is getting transferred from the employer to the employee, that is considered as other assets. Computer and electronic items means all those electronic items which are in the nature of computer. We call it as ejusdem generis. Interpretation of law. Ejusdem generis. It is called as ejusdem generis in interpretation of law. I think in your law you will learn what is ejusdem generis. Are you with me? Say in the case of other assets like TV, AC, fridge, etc. If there is a transfer of ownership, how do you value the perquisite? Take the actual cost first. Then you deduct depreciation at 10% for every completed year under straight line method. The first two categories they were saying WDP. The last category they are saying SLM. What is SLM? Straight line method. And what is the specialty? Amount of depreciation will be constant throughout the completed years. Are you with me? Yes. Don't worry, let's make use of an example for a better clarity. Less amount recovered from the employee shall be the taxable value of perquisite. Are you with me? Yes. Let's take an example. Okay, listen. Say a TV valuing 1 lakh rupees. A TV valuing 1 lakh rupees have been used by the employer for 2 years. For 2 years, he have been used it. On the third year, he transferred it for 5,000 rupees to the employee. Tell me, how do you value it? Take the actual cost 1 lakh. How much is depreciation for year 1? 10% under SLM. So it will be 10,000. Year 2 also 10,000 because it is SLM right now. So how much is the remaining value? 80,000. How much is the amount recovered from the employee? 5,000. So you tell me how much is the taxable value of perquisite? 75,000 shall be the taxable value of perquisite in the hands of employee. Are you with me? Isn't it simple? Isn't it simple? Computer and other electronics. How do you value? WDV depreciable at 50%. Then motor car. WDV at 20% for completed year. How about the other asset? SLM at 10%. From all these things, deduct the actual amount collected from the employee. Then the remaining value will be shall be the taxable value of perk. Is that okay? Perfect. So this is how you have to value the transfer of movable. So moving on. So what is the note? Where employee is paying any amount in respect of such asset, the amount so paid shall be deducted from the value of perquisite determined above that we have already considered. Now moving on to the next perquisite. What is that, friends? Club expenditure. Let's understand what is this club expenditure. Are you all listening? Yes. Let's see what is this club expenditure. So can you read the first box where such expenses are incurred wholly and exclusively for official purpose? What do you mean by that? Club expenditure for official purpose. What is that? Listen. Certain companies, what they will do, they will give this club entry and they will sponsor the club expenditure of marketing department employees. Why? They will go to the club, mingle with people over there, and they will get clients. Are you with me? Yes. If the company is sponsoring your club expenditure and if that is for an official purpose, just like marketing staff and all, then how do you value the perquisite? Very simple. Not at all a taxable perquisite. Why? Because you are not getting any personal benefit. Are you with me? Yes. So nothing shall be taxable. Why? Because I am not getting any personal benefit. My employer want me to go to that club for what purpose? For getting likes. But I am enjoying also. That is fine. You with me. It's an indirect benefit that I am getting, even though it is official purpose. I am going and enjoying, no problem. Now, but there are two conditions for that. What are the condition number one? What might be the condition? Similar condition that we have discussed earlier. The employer should maintain complete details in respect of expenditure, plus the employer gives a certificate for that expenditure showing such amount has been used for the performance of official duties. Number one, that employer should have a complete expenditure record. Plus, he has to certify that he's our marketing employee and I only pushed him to enter that respective club and enjoy. For getting what? Our clients. Are you with me? If your employer is certified, then department have no problem. Are you with me? Yes. But basically, you should justify it also. Are you with me? Yes. So it should be a something related to marketing or something. Then you can justify it. Are you all with me? Yes. Are you with me? Moving on to the next one. What is the next one? Can you read the next one? Where health club, sports and similar facilities are provided uniformly to all employees by the employer. Say for example, in our company, there is a gym. There is a gym in the company, or there is a recreational setup in our company. You can, without paying anything, all my employees can use that benefit. They can go pick up the dumbbell, do some exercise, etc., etc. Are you with me? Yeah. Or you can use that treadmill, or you can use that particular sport area for your recreational activity. Are you getting a benefit? Yes, you don't have to join a gym. There is monthly savings. Are you with me? Yeah. But department say nothing shall be taxable. If it is available for all the employees, nothing shall be taxable. Are you with me? Yeah. Let's read that again. Where health club, sports and similar facilities are provided uniformly to all the employees by the employer, not a taxable perquisite. There is no provider, okay. There is no condition for this. It is not at all a taxable perquisite. Are you with me? Are you with me? What is the next one? Can you read the next box? Where employer has obtained a corporate membership of club and facility is enjoyed by employee or any member of his household. What do you mean by corporate membership? Corporate membership. Say there are certain companies where, say for example, say our company is in Bangalore. Okay, our company is in Bangalore. So if you are joining an employee of my company, you can freely enter a nearby club. So there is an entry fees in a respective club, and you can simply show the employee ID card and you can simply enter the respective club. Are you with me? Yeah. For every other person, say there is a joining fee or a entry fee, but for you it is free because I have a tie-up with that respective club. Are you listening? Yes. Say I have a tie-up with that respective club so that you can all enter that respective club for free without paying any joining fee or entry fee. Are you getting a benefit? Yes. What is that benefit? You don't have to pay that entry fee. I would have paid a lump sum amount for your corporate membership. I would have paid a lump sum amount to that respective club to obtain a corporate membership. Are you with me? Yes. Nothing shall be taxable. Don't worry. Nothing shall be taxable. That's what they are saying. Where an employer has obtained a corporate membership of a club and the facilities enjoyed by the employee or member of his household, amount incurred by the employer for such facility shall be taxable perquisite in the hands of all employees, not yet over. However, initial fees paid for obtaining corporate membership shall not be taxable perquisite. There are two things. Your entry fee benefit shall not be taxable in your hands. But if you are going in that club, entering in that club, having some food or having some drinks, and I am sponsoring that, then that value shall be taxable. You will be that entry fee saved by you shall not be taxable. Any other expenditure reimbursed by me or directly paid by me shall be fully taxable. Are you getting the point? Are you getting the point? Very simple. Say I took a corporate membership in a respective club. All my employees can freely enter that respective club. That entry fees benefit shall not be taxable in your hands. But if you are incurring any other cost in that club and I am reimbursing it or I am sponsoring it, then that cost element shall be taxable in your hands as a taxable purpose. Is that point clear for you? Yes or no? Perfect. And what is the last one? Any payment or reimbursement by the employer of any other expenditure incurred in a club by an employee or member of his household, amount incurred as above, reduced by any amount charged from the employee, shall be taxable purpose. In any other case, if the employer is incurring any other cost for the benefit of employee, the actual cost incurred by the employer shall be fully taxable in the hands of employees. Are you all with me? Are you all with me? This is how you have to value the purpose, and I hope this much is clear for you. Is that clear?
Hello, my dear ones, this is CA Jose Kurian, and this video is to inform you about how to purchase our book as well as recorded lectures. For the book, you visit www.cajosecurian.com. Then you scroll down and you can see our both handbook as well as workbook for CA as well as CMA, Inter as well as Final. For the lectures, you scroll up, then click on to the classroom. In the classroom, you can scroll down and you can see all courses listed. We have CMA Final English as well as Malayalam, then CA Final English as well as Malayalam, then we have CA Inter English as well as Malayalam. Then select your course, make the payment, and you will get instant access. Alright, now what are you waiting for, friends? Subscribe now. All the very best, take care, and God bless you all.